Entrepreneurship can be a lonely journey. If you share your biggest wins and your biggest successes, it might come across as arrogance. But if you share your biggest losses and your biggest defeat and all of your stress, it might really overwhelm those who are close to you. That's why it's so critically important to be part of a community of entrepreneurs who can support each other through all of this.
A very safe and conducive place for founders, entrepreneurs and investors to come together. There's no pressure.
And I think with the amount of negativity that we come our way every single day, it's so amazing to be surrounded by positive people and their mindset.
And I felt that people always listened to what anyone had to say. There was no one that was right, no one that was more important.
It's a sense of like-minded individuals coming together, essentially to learn from.
To connect with everyday people, but people that has a willingness to succeed in life.
To network with other businesses and feel inspired for change of the future.
And ultimately create a space to add more value to network partners and individuals that are attending the events.
That's why we created something like Founders Events that can be one or more ecosystem events for entrepreneurs and founders where you can connect, learn, be inspired and grow together.
The idea around a group of people that not just want to make an impact, but can make an impact, more importantly, coming together is very exciting.
That have a common interest and a common goal to grow their business, to learn from one another, to bring employment and economic growth to South Africa.
Taking into account where South Africa is right now, that is critical. We all have a lot of work to do, and the SME segment and entrepreneurs, essentially this is where we can make a difference.
We kicked the year off with FundRaise Con, an event that's focused on everything fundraising for entrepreneurs. By the middle of the year, we host Scale Up Con, that's focused on everything scale-up methodology for business owners. And by the end of the year in Global Entrepreneurship Week, we host our flagship event, Cape Town Founders Conference. We hope to see you guys at all of those.
All right. Welcome everyone. Welcome. I'm very excited to welcome all of you guys to FundRaise Con today. We have an amazing lineup of investors and funded entrepreneurs here with us today that we're going to be running through. So I'm personally very excited about this session. I think the world has changed a lot in the last year. The investment landscape and the fundraising landscape has changed a lot as we've seen COVID roll out throughout the global economy. Yet it has been a very exciting time for entrepreneurs to be raising capital. We've seen record amounts of deals going through in Africa as well as in the rest of the world. Specifically, the African venture capital ecosystem at the moment is being spotlighted as something with amazing growth. The Disrupt Africa report speaks about a doubling in just 2 years of the amount of money flowing in from all over the world into African venture capital, which also officially makes it the fastest growing venture capital ecosystem in the world. And I think South Africa is one of the kind of key markets within that metric, where more and more exciting entrepreneurs are creating brilliant companies that can play at a global level and that are attracting funding both locally and internationally. So as Outsource CFO and as the team from Founders Events, we're super stoked to have you all with us here today. We have over 100 founders and investors on the call today. We hope to kind of share learnings, to inspire, to give great content, and just bring an ecosystem of entrepreneurs and investors together for a thought-provoking day. Michael, can we quickly put up the agenda so I can quickly share that? I just want to run you guys through what you can expect in the next little while. First, joining us on stage will be Matsi Mundise, will lead us with a keynote on why Africa and why now. Very excited about that. I'll do an intro for Matsi just now. Then we have the team from Investec, Setlugani and Journe, speaking to Donna Pretorius, one of the Outsource CFO co-founders, just about the finance readiness program and the role that corporate South Africa plays in helping entrepreneurs raise capital. Then we're going over to the big guns. Two of the big local investors, Ian Lessem and Clive Butko, are both going to be sharing their journey over the last while. They've both been some of the most active venture capitalists on the continent. So our very own Leanne is going to be interviewing them about what VCs are really looking for in terms of a great deal. Then I'll be hosting a panel called How I Built This, where we're going to speak to 4 founders who have recently raised funds about their journey and their lessons learned on that fundraising journey. Then just the next one, please, Mike. Great. Then after a short break, we'll come back to a panel interview with two very well-known billionaires, South African Rob Hersoff and Swedish Hans Otterling. We're going to be speaking to them about Lion's Cage and a couple of their very interesting ventures and fundraisers as of late. Some big numbers to be thrown around in that one. And then obviously FundRaise Con won't be complete if we don't have something on exits. So we're going to be speaking to Justin Drennan from Parcel Ninja. They've recently done a big exit, and we're keen to hear more about that, as well as his dozens of other interesting ventures he's involved with. Then the Outsource CFO team are going to lead a discussion around being finance ready as an entrepreneurial company, what that really means. And Donna Pretorius, who heads up fundraising at Outsource CFO, is going to be talking us through a perfect strategy to prep for a fundraise. And then if we have a little bit of time at the end, maybe we'll pull some of the speakers up on stage to just talk you guys through what what the questions are from the floor, and just kind of discuss today's sessions. So so that's it from our side. From me, I'm grateful to have you guys here. I would encourage you to switch off all other electronics, so put off the emails, put off the cell phone, and just spend your focus time here with us for the next 2.5 hours. I think the content will be worth it, and the lessons learned from dozens of interesting founders and investors will be super valuable on your own journey. I'm very confident of that. So then I'll ask, without further ado, I'll then ask Matsi to please step up on stage with me. Matsi, are you here with us? Have we got Matsi on the line yet? Let me have a look. Okay. I'll give her let's just give her another second. If it doesn't work, we can always hit our second session. Okay, great. So guys, Matsi is not on the line yet. We'll maybe jump over. Let me see if we can get Setlugani, Journe, and Donna online. Donna, are you guys online with us?
Hello, everyone. Yes, Lo, I see Journe is online.
Yes, I am. Hello, everybody.
Hey, Journe. Hey, Donna. May I ask you guys to then jump over to the first session, and we'll just swap the two, if that's all right.
Perfect. Sure. Yes, we can. Journe, do you know if Setlugani has been able to join us yet?
Let me just check. Give me 1 second. I'm sure he will be if he's not online in the next minute.
Perfect. While we wait for Setlugani, let me just start off by saying it's so great for everyone to tune in today. We're going to talk a little bit more about the Finance Readiness Program, a program that we as Outsource CFOs are really proud to partner with Investec CSI on. This is we've run this Finance Readiness Program the last 3 years with Investec. And we are really looking forward to the next years of cohort. So I'm just going to quickly give you a little bit of idea. I'm going to have an interview with Setlugani and Journe. They're both at Investec CSI. I'll introduce them right now. But so a really action-packed interview, really something to look forward to. And really looking forward to unpack that interview with Journe and Setlugani.
Donna, I'm waiting for Seth to respond, but I'm very happy for us to continue, if that's okay with you guys, and I'm sure Seth will join us when he's ready.
Oh, wonderful, Journe. Yeah, so Journe, it's obviously my privilege to introduce you to the rest of the audience. So Journe Milana heads up the entrepreneurship portfolio at corporate social investment at Investec. Journe, welcome to the floor.
Thank you very much, Don. It's really good to be here. Hello, everybody. I know it's not the same as the face-to-face kind of interventions that we're normally used to, but yeah, I suppose this is all of our new reality. So very excited to be here, and thank you very much to you and your team, Donna, for hosting us again. I see Seth might have just jumped on as well.
Hi, Seth Lughani.
Hello.
Welcome, Seth Lughani. To the audience, I want to say it's my privilege to introduce Seth Lughani to all of you. Seth Lughani heads up is the head of corporate social investment at Investec. So Seth Lughani, we're so privileged to have you here, and really looking forward to having this interview with you.
Thanks for having us, and yeah, good afternoon to everyone, and what a privilege to be part of this conference this afternoon.
Perfect, Seth Lughani. Gentlemen, I want to start off. Our topic for today is the Finance Readiness Program, and Seth Lughani, my first question will be to you. Before we unpack the program a little bit further, Seth Lughani, just standing still on entrepreneurship at Investec. Why is entrepreneurship at Investec so important to you?
I mean, I think entrepreneurship broadly to the investor community is a very, very important piece from a perspective that we are what we are today as an entity because of entrepreneurs, because some brave souls decided that this is what they were going to do, and they sat around a table, 8 of them, a round table at the time, and look at what they've gone and built. But besides that, I think in the corporate social investment terms, it's important because it enables other people to become active economic participants in society. And when people are active economically, their sense of worth, sense of dignity, sense of contribution, sense of purpose, and a whole host of other things return to them. But most importantly, their ability to put bread on the table is there. And what is important is it is our hope that touch wood, they should be discouraged from getting involved in the many social ills that exist in society because they have carved a path of sorts for themselves. So that's why it's so important for us. In the growth of entrepreneurs lies the growth of many other people, and that's critical.
It's so great to hear that Investec as a corporate has such amazing heart for entrepreneurship. It's really so encouraging. Seth Lughani, if I can pick your brain and to potentially just unpack the Finance Readiness Program a little bit, what's Investec's objective from the Finance Readiness Program?
Well, I mean, I guess one thing is that entrepreneurs would need too many things, and so many different things. And for us, we had to hone in on at least 2 spaces. And one of them is that we felt that if we played in the facilitation of access to market space, we would facilitate some form of growth of these enterprises. But equally, that if we played in the space of finance readiness, this is not finance provision. This is very important. You know, you speak to many other investors, they tell you, quite frankly, it's not the lack of finance that is an issue. What is an issue is the readiness. It's the caliber of entities that approach them for funding. So what we want to try and do is we work with the enterprises to help them become investor ready, to help them become funder ready. There are so many different things here. You can hear how passionate I am. And I have no doubt that many who are joining us on this conference are very passionate about their very different businesses. And that's the point. Very often, the jockeys and the champions on anything, including in entrepreneurship, are very passionate beings. But actually, in the course of this passion, it's very easy to negate the fundamentals of business, the fundamental pieces around being legally compliant, the fundamental pieces around your financing model, your business model, all these other considerations, even issues around taxes for that matter. You know, you wake up every single day, all you want to do is you want to make this thing a reality. You run, you walk, you live, you breathe. But it is so easy to lose sight of key considerations that investors and financiers want to look for when they want to invest in any business. And this is not something you do overnight. And this is why our program is not a microwave approach. It's one that says if you commit, you commit, and you commit for quite some time, and we work with you hand in hand. And we're so grateful to have OCFO as a partner in this initiative, because you guys are at the forefront of making sure that we do some panel beating or 2 or 3, and in the end, we put everybody in front of investors, and wow, my goodness, the feedback received from the investors is such that we achieve that which it takes them 2 to 3 years to achieve in a short space of time. But my goodness, this is no walk in the park. Ask those who've been through this program. And Dana, you know yourself how hectic it can get.
Sure, Setlagane, when I hear you speak like that, it really makes me passionate about entrepreneurship, and I can just convey the gratitude. Also extremely proud to partner with CSI. Journe, I'll move over to you. For the audience, the Finance Readiness Program is a 6 to 8 months accelerator. Also see first partnering with Investing CSI, where we are strategically looking at entrepreneurs that want to raise funding, amazing interventions, really working with a closely bespoke, working with entrepreneurs, really to get them funding ready. Journe, what are some of the successes from past programs and some highlights for you, also working so closely with entrepreneurs?
Yeah, it's really an exciting program, as Seth has alluded to, and you yourself have given testimony to. But I think sort of the crux for us, really, the successes lies in the value that the entrepreneurs give us in terms of their feedback, but more specifically in terms of the outcomes that are achieved. Because at the end of the day, it's like, was their money banked in the account? That's what people need to know from an entrepreneur perspective, because that's what they're really chasing and trying to understand. So I think for me, what has really been satisfying in some really amazing stories is just, I think in the short time that we've been doing this, and it's only been since about 2017, but feels much longer because of the intensity of the program, we've done really, really well in terms of getting entrepreneurs over the line with investors. Because as Seth alluded to, the investors, are out there wanting the entrepreneurs, but they're not necessarily, the entrepreneurs themselves aren't necessarily ready to receive that funding. And, the investors are there to do what they're there to do, invest in the entrepreneurs. Having them ready, getting everything polished, getting everything organized is where we come in. And I think one of the big successes that I'm really proud of the program is the range of financing that these entrepreneurs have been able to get. So as much as this is a corporate social investments program, it's very, very well thought, structured, and crafted in terms of understanding what entrepreneurs, where they are at, what they need, and how we get them over the line. So things from VC equity funding to relief funding to grant funding to short-term financing, asset loan finance, etc. These are all of the transactions that have been able to be realized on the Finance Readiness Program over the years as well. So I think for me, it's just the wide range of entrepreneurs, the different sectors, and the different kinds of transactions that have actually been realized.
Sure, Journe, I can also just attest to that, working closely with entrepreneurs, really diverse backgrounds, diverse industries, just showcasing that there are success stories. You don't have to be necessary, have an equity play necessary to get that necessary funding for you to scale optimally. And yeah, it's so great in working with these entrepreneurs and really just having that impact in their businesses and life. So from our end, as a host to this interview, I want to thank you, Setlagane and Journe, for your time. That's all that we have time for today. And I want to thank you for so much for what Investing CSI is doing for entrepreneurship in South Africa. Thank you.
Thank you guys very much.
Thank you very much. Everything of the best.
Right. Thank you, Setlagane. Thank you, Journe. Thanks, Donna. Great to have you guys. Cool. So I believe we have Matsi on the line with us now. Matsi, can I ask you to join me on stage, please?
On our virtual stage. There we go.
There we go. Great to see you. Great to see you. So we've after some technical difficulties, we've got Matsi here with us. This lady has a rap sheet that is far too long for our conference today. But you guys may know her as one of the big voices behind Simudisa, which is a entrepreneur advocacy platform in South Africa that's doing some really, really amazing work. She's also the founder of Faraha Holdings in Africa, and does some really great stuff through there. And gosh, I can't mention all the boards where Matsi sits on. It will take us too long. But it's a privilege. I know you're in between board meetings today, so thank you very much for being here with us today. It's super special to have you. We've asked Matsi to speak to our audience of entrepreneurs and investors about kind of timing-wise, why Africa, why this is a good idea, why is the world spotlighting the continent right now, and why are we the fastest growing venture capital investment market in the world? Some of those questions will all go into what Matsi has for us, I believe.
Yes, Lo, I'm very excited. Thank you very much for the invite. And I think
Great
it's
to
worth
have you.
sharing where our story started, Brant. I think you had just started outsource CFO, like literally just moved into your Woodstock office. So this is many, many moons ago.
Yep.
And I was also still very much involved in the entrepreneurship development space, which I still am. But that's when we were growing Simodisa. So it's been amazing seeing your journey grow. And I think I'm happy to speak on the topic that I've been asked to speak on, because it also reflects on your journey as an entrepreneur. And a lot of people that are on this platform now and wanting to participate in the conversation we'll be having, it's important to have an honest conversation of, as much as why is Africa why investing in Africa is a good idea, we have to be realistic around why it might be difficult for us to really progress. So I think my speech will just speak a little bit to that.
Brilliant. No, so keen to hear what you have to say, and great to have you again. I'm going to leave the stage over to you. Everyone is really excited to have you. Thanks, Matsi.
Great, thank you very much. So Lo, yes, my topic for today is why investing in Africa is a good idea. But to answer this question, I will ask another question. Why is investing in Africa still just an idea? And when is it going to be an action plan? Because we speak a lot about we need to invest in our startups. We need to empower our entrepreneurs. Entrepreneurs are important to growing our economy, but we don't necessarily walk the talk. It's something that's relevant, something that's politically correct. But I think even in South Africa, it's something that we actually are not doing it. The numbers will tell. Yes, the Africa potential is growing, but I do feel that everybody seems to have a plan for Africa, but Africa does not seem to have a plan for itself and for everybody else. And we all know that Africa has, 65% of the world's arable land. And yet African countries spend more than $35 billion dollars per annum importing food yearly. And if you've traveled our continent, you'll see that it's a beautiful continent. It's full of culture, song, dance, diversity, but we have very weak political systems, poor infrastructure, lots of looting, and we're just very slow in getting on with it. You look at how long we've been, a continent that's post-colonialism. I think South Africa is one of the youngest countries that has gone beyond colonialism, but we still, the countries that got liberation from 1960 onwards. But yet, if you had to look at the state of affairs, if you had to look at the state of the quality of life, if you had to look at the Gini coefficients that exist, if you had to look at the infrastructure, it's not a good story to tell. So I think as much as why investing in Africa is a good idea, we have to be aware of where are we right now and how are we going to progress ourselves, because we also can't shy away from the realities, shy away from the concerns, shy away from the challenges that we have as a continent. And a reflection that I made when I was drafting the speech is, I look at, when I've never in my life ever heard any African leader saying, our national strategy is to deploy capital and resources in the East, the Middle East, or the West, right? There's no one African country that says they have enough money to say, part of our growth as a nation is how now do we deploy our resources, our money, our capital into other regions of the world. And it's normally how everybody else feels like, okay, let us deploy X amount of money into Africa. It's not because they see Africa as, a country that is buoyant, a country where, Africa, a continent where it's equal opportunity for everybody. It tends to be quite exploitative, right? If you had to look at China, it's been deploying billions and billions of dollars into our continent. It's been deploying billions into our infrastructure. And it's not because they think Africa is such a wonderful place and we have to put money in there. It's because they want to extract our natural resources at a discount and with unfavorable terms. And they would want to then take these resources, these natural resources, back to China to beneficiate it, and then sell it back to us as Africans at a premium. So that is the reality, right? If we had to look at how things have been working, how trade has been working, yes, of course, they've been able to build airports, shipping terminals. I mean, if you go to a lot of our African countries, you can see that the hospital was built by a Chinese firm, and even Chinese workers, they might not even utilize the original people of that country. The airports, the shipping terminals, the roads, the railway networks, and they're investing in Africa's infrastructure because things need to move from land to sea so that they can ship them over to China, so that then China can beneficiate it, and then China can sell it to us at a premium. And it's impossible to beat Chinese prices because, you know, they've created a whole system. So that's kind of where we are. And then also, if you had to look at aid, Africa is known to be a continent of aid, cap in hand, starving children. It's a dark continent. When people are having conferences, the conferences would lean more to around how much money do we have to donate to African countries so that they can, you know, they can survive. So I think for me, it's more a function of the system is not right. You know, the system that has been created by history, it's not benefiting us. And if we're talking about investing in ventures in Africa, investing in entrepreneurs, investing in startups, we have to be aware of the system in which we're operating in. And this system is not growing Africa. This system is not growing enterprises. This system is not growing our economic potential. So I think I had to just, as an introduction, bring that to light because we have to provide context. But as they would say, a boer maak 'n plan. We need to figure out what is Africa's plan for the rest of the world, because they seem to have a plan for all of us. How is Africa going to tap into its economic potential? How is it going to benefit from its own natural resources, including human resources? How is it going to leverage its youthful population? How is it going to invest in its own infrastructure? Because the reality is we have all the resources that everybody's making money out of. So now how do we reverse that cycle? How do we change the system that is not working for us? And how do we ensure that we have a plan for everybody else? We are in a position where we can deploy resources into other countries and also deploy resources into our own people. If you had to look at a country like Kenya, it's very dynamic. You know, the entrepreneurship that happens that side of the world has caught, well, Nigeria and Kenya, it's caught a lot of global attention. And when people are speaking, and people speak about that, you know, the founders in Kenya, they, you know, it's quite dynamic because these are founders that are coming from other countries, but then they would be able to partner with localized partners. And in that way, they'll be able to attract funding into their ventures. And in essence, I feel that South Africa, the rest of the continent, we have so much potential. And like in any other business venture, you have to design a business plan. So I see how, as a continent, we have to see ourselves as a viable business, right? The triple bottom line is important. We have to have business models that are fit for purpose. We have to have fit for market. We have to have a clear and tangible value proposition. We have to know what problems we're solving for. We have to collaborate more and be more trusting of ourselves. And we also have to have clear and enabling integrated policy frameworks that do allow for this growth to happen. As I say, Africa definitely needs to have a plan for itself and for everybody else. And I have seen some pocket of changes. You know, countries like Rwanda are quite progressive. Countries like Ghana, I mean, Ghana made a huge statement a few weeks back around how they're no longer going to be exporting their cocoa to Switzerland so that Switzerland can make these amazing chocolates that we all love. They're actually going to try beneficiate their own natural resources like cocoa. And yeah, I think I have a few minutes. There's so much that I can say about this topic, but in closing, I feel that the potential is there, but I think until we see it as less of it's a good idea to invest in Africa, it is the only idea, right? Investing in Africa is the only idea, and it has to come from all of us. It has to come from Africa, for Africa, and because we can't have any more missed opportunities, generational missed opportunities. We can't have any more years of being a continent of aid. How many more years are being referred as the dark continent? If we're not investing in ourselves, why should anybody else invest in us? So investing in Africa needs to go beyond just an idea. It needs to go into action mode. Investing in Africa is not just a good idea, it's the best idea. And if it's not us, then who? And if it's not now, then when? Thank you very much.
Great. Thanks so much, Matsi. I'm sure behind the scenes, everyone's on mute, but there's a loud applause for you. Thank you very much for sharing some of your thoughts. We really appreciate your time in the middle of all of these board meetings to join us here today to share some ideas. Thanks for that.
Thank you very much.
Brilliant. Thanks. We'll speak soon. Guys, we've got a very interesting next session. I think that's fitting after some of the thoughts Matsi has just shared. We're going to speak to two of the investors who've been the most active on the continent, probably in the last year. If I can please have Clive and Ian join me on stage, please, that would be brilliant. So, guys, we have Clive Butko from Kalon Venture Partners will be with us, and Ian Lessam from Havaik will also be here. Great, yes, Ian and Clive, brilliant. Good to have you, gentlemen. And then we'll have,
thank you. How are you doing?
Interview these two gentlemen. Well, wait for the Anne. Are you well, gents?
All good, thanks.
Brilliant. I'm going to leave you in her hands. Thank you very much for being here with us today.
Great,
thanks for the opportunity.
Okay, so thank you for having us. I'm excited, and I have the privilege of facilitating this panel discussion on what investors want. So just a bit of a background on who Clive is and who Ian is. Clive is the former Chief Operating Officer of Accenture, South Africa, and has over 28 years of management consulting experience. He's played numerous roles, leadership roles, and he's currently the CEO of Growth Tech. So welcome, Clive.
Thank you very much. Just to qualify that, the CEO of Kalon Venture Partners.
Thank you, Kalon Venture Practice. Okay, Ian is the managing partner of Havaik, and which is an investment and advisory firm that specializes in early stage, high growth African businesses. Thank you for joining us, and welcome, Ian.
Thank you. Thanks for having me.
Great. So thank you for having us. I think my first question to both of you is just to reflect on 2020. What a year. I remember we started, I think, Ian, we had the first fundraising conference last year around this time, where we had the opportunity to speak into what was now the global pandemic, what has panned out to last longer than we anticipated it would. So I want to pose a question to you guys. What has it been like investing during a global pandemic?
I'm happy to start off. So I mean, I think everyone joining us today will be quite aware that the pandemic has resulted in a unique acceleration in the adoption of technology, both in South Africa, Africa, and globally. So both Clive and myself, we're fortunate enough to be technology investors. So, with a bit of luck and a little bit of brains, we seem to find ourselves in the right sort of sector at the right time. I guess in terms of from an investing point of view, notwithstanding that there are challenges, it was kind of, I think Warren Buffett probably summed it up, and I'll paraphrase it from something that he said was, in times of crisis, you can either go into a defensive strategy, or you can kind of say, well, looking back, some of the largest corporates globally, the Dells and the Apples and even the Amazons were all founded around a crisis. So you can say, well, what opportunities are going to present themselves that otherwise wouldn't have been there? So on our side, coupling that kind of premise together with this kind of rise in the adoption of technology, we took the view that there were some really great opportunities that emerged. And from our side, we probably had our most active year. Well, not probably, we did have our most active year in 2020. Of course, it had challenges. Zoom is a nice tool, but it's not how you form close relationships. But you kind of you overcome that. and kind of have no choice but to move forward. So challenging, but certainly exciting, and we really are lucky to find ourselves in a position where 2020 did result in some fantastic opportunities being added to our portfolio.
Absolutely, thank you. That's interesting. And Clive, how's it been like investing?
Yeah, I think
pandemic?
thanks for that. I think we never missed a beat. I must be perfectly honest with you. So we have 6 companies in our second fund, and all of them very disruptive digital tech companies. Our minimum growth we had year-on-year growth was 80%. Our maximum was 800%. So we grew between about an average weight at about 215% during the year. I must be honest with you, I think, so we didn't make, I think very much like Ian, we probably made more investments. I haven't actually done the total follow-on investments plus new investments during 2020. The only thing for us, I must be honest with you, we invest in people. At the end of the day, we invest in people. We invest in, we build the people, and the people build the businesses. And that's how we do it. We help build people that build great businesses. So we had to get our mindset changed from really getting to know people on a one-on-one basis, having dinner with their families and having lunch and drinks and whatever else you do, because at the end of the day, you have to be able to, you're going to form a relationship between 7 and 10 years with your entrepreneur until you can exit their businesses. You have to get to know them. So we had to get through that mindset change of saying we might not meet these entrepreneurs, and did not meet the entrepreneurs face to face. We made investments without actually meeting them. So we made new investments and never actually having sat and have a coffee with an entrepreneur. Now that took us about 2 days to get over that. But then we went back, we said, look, we are where we are. We can't change what's happening around us. But what we can do is we can make sure we continue investing. We had the capital, we're still seeing great companies, and we continued life as usual. I think as Ian said, I mean, COVID has accelerated digital technologies by, I'd say, 5 years, a minimum 5 years in our clients, in the corporate clients. So we saw in the past, to get to the CEO, to go and see them, it took you a month, 6 weeks. Now within a week, within a day or two, you had a Zoom call. So our productivity, I spend more time with our investing companies, probably 3 times more time with our investing companies than I did in the previous year. And I spend more time with clients, capital providers, everyone, just because they were available. And we just went hour to hour to hour. So, they say if you dealt a lemon, make lemonade, and that's exactly what we did.
That's quite encouraging to know that, for entrepreneurs to know that investors never missed a beat, and that, you probably made the most investments in 2020. Moving on to the next thing, I think looking ahead, Matthew mentioned, what entrepreneurs are doing in Kenya and investors in Nigeria. And I think Flutterwave was one of the biggest things to come out of Nigeria. What do we expect? What are you expecting from South Africa and Africa at the moment when it comes to investments?
So it's probably like the first time someone breaks the 5-minute mile. Up until that point, it's impossible. But as soon as someone breaks it, it's kind of within the realm of possibility. So I think it's the likes of Jumia and Flutterwave, and there's a whole bunch of other ones, InterSwitch, which hasn't IPO'd yet. These are all African unicorns, and it's kind of going to accelerate. So once that 5-minute mile has been broken, you're going to see more and more entrepreneurs realizing this is a possibility. I guess the thing to unpack is not just them kind of breaking that spiritual level of $1 billion. It's around how they were able to do that, and there's very different players. So you talked about you mentioned South Africa, Kenya, Nigeria, very, very different markets. So from our perspective, South Africa, which is from an equities point of view, heavily dominated by a handful of world-class blue chip corporates, and what that means is that we have typically tended to build as technology entrepreneurs for those blue chip corporates, which is not a bad thing, because if you can service kind of, let's just say, easy example would be a NASPA, a South African company once upon a time that operates globally. There's no reason why you can't service an equivalent business in the US, in Europe, in Asia. So if you're building for kind of powerhouses locally, you can certainly build and compete internationally. So we certainly see how you're going to get to that $1 billion mark, more on a B2B strategy in South Africa. And the second point of that is from a population point of view, we're not that big. 50 million people is a lot of people, but it's not 200 million people in Nigeria. It's not 150 million people, in the Kamisa region, Kenya, Rwanda, Tanzania, Uganda, etc. So we don't have that B2B, B2C population required to really get to scale. But when you go into Nigeria, I've already mentioned 200 million people. If you're in the payment processing space and you happen to get a couple of bucks every time one of 200 million people happen to do an internet payment or internet purchase, you can hit that scale quite quickly. So there's different strategies for different markets, but certainly it's great to see the foreign interest coming in. So of course, locals, we want locals to invest. We locals investing in Africa in our future, but foreign capital helps to build markets. So it not only brings in capital, but it brings access to new markets, new skills, best practices, new networks, etc. So there's a whole lot of really encouraging things happening on the continent. To my earlier point, I think that this 5-minute mile has been broken, and you're just going to see more and more and more. And hopefully it kind of becomes like the weather, it's sunny today, move on. We just, another unicorn's been made today, move on. Let's move on to the next one. So
Right.
certainly, on our side, we are incredibly encouraged by the Flutterwaves, the InterSwitches, Jumias, etc.
Thank you, Ian.
I think I'll add to that. I mean, to me, and then the metaphor I would use, and Lo mentioned up front in his introduction that Africa was the fastest growing venture capital continent in the world. Now, I didn't have those stats, but it doesn't surprise me. But at the same time, it is coming off a very, very low base. So yes, in all honesty, Africa, I say a couple of years, Ian uses the metaphor of the 5-minute mile. I just use a tap metaphor. The tap was open and was just dripping, dripping, dripping. A little bit of a drip here, a little bit of a drip there. There was a little bit of investment here, but that tap is flowing now. It's really flowing, and the African continent is becoming more relevant internationally. And at the rate that it's going, there's just no turning back. I've been in the last 2 weeks contacted by international VCs about potentially investing in a fund in South Africa for an African fund. This hasn't happened to me in 8 years since I left Accenture. And in the space of a month, there's 3 top family offices, VCs, international capital providers that have contacted us to say we'd like to use you as a conduit to potentially deploy capital in Africa. And it's because of the likes of people are seeing that they're not getting the returns in the rest of the world. The rest of the world, the number of VCs in America, there's just trillions and trillions and trillions of dollars. There's just so much capital chasing, not enough deals around the world, but we just don't have that capital chasing. We've got great deals across Africa, great entrepreneurs, great human capital, but just not enough capital. So you see the majority of the capital chases Series B, Series C, where you get a 10, 20, $30 million raise, and that's typically capital coming from outside of the country, or 1 or 2 African VCs, very few local VCs. So all of a sudden, the taps are open. I tell you something, you ain't seen nothing yet. I just think we're starting to see something special. I mean, if you look at the world population prediction up till 2050, they say there's going to be 2.4 billion people extra on the planet, and 1.2 billion of those are going to come from Africa. So you can just see where the opportunities are, and the money always follows opportunities. And we are very excited about. We're only a South African fund right now, but we want to, really think about creating a Pan-African fund, because that's where we see the big opportunities.
Thank you. Thank you so much for your insights. I think we've actually run out of time, but yeah, I think all the entrepreneurs on this line have gotten the opportunity to hear what your thoughts are, and it's exciting to know that, this space is actually growing. So thank you so much for your time.
Thank you very much.
Ian, Clive, great to hear all of that. Glad to hear you guys are on fire like this. It's really inspiring to hear. Well done, and keep up the great work. We'll keep the conversation going.
Thanks, Lo.
Thank you.
Okay, guys. Thanks, Leanne, for hosting us. We're off to our next session. I'm sure everyone got some really interesting insights from the investors. The next session is all about the entrepreneurs. So we're going to be speaking to 4 founders who've all raised different rounds in the last year. So all of these guys have gone through the process of prepping for and acquiring capital successfully to scale their ventures in South Africa and into the rest of the world. So I'll quickly ask Sam and Warren and Greg and Antoine all to join us on stage here. Let us get the guys on. Give it another minute. We're at 3 for 4. Hey, gents, how are we doing?
Good
There we go.
How's it?
Good to see you. Antoine, I see you're listed as Warren as well.
I don't know why, but cool, I take it. Huh?
No, no problem, no problem. Gents, it's wonderful to have all of you on the call. I'm really excited to chat to all of you. I think you have collectively got so much experience to share with all of the other entrepreneurs who are also either going through their own raises or prepping for their own raises. So thanks for being here and taking some time out in your kind of crazy schedules to share with the crew. Great. So what I'll do just as a first step, I just want the audience to get to know all of you guys a little bit. And because you're all founders, I thought an elevator pitch would be an appropriate way to ask you to do it. So I'm going to give each of you guys just like a kind of a 30-second, maybe max 1 minute intro of yourself and the intro of your company. We just want to quickly hear that impressive elevator pitch that you guys have built. Greg, will you fire us off?
Will do. Greg Chen, I'm the CEO and founder of Mobiz. Mobiz is a marketing software as a service that enables users to create hyper-personalized digital engagement at zero data cost to their customers. The average person sees and ignores more than 6,000 ads a day. Mobiz essentially gives businesses the superpower to go beyond ignored. In South Africa, we are the only direct marketing software that achieves data-free commerce for our customers.
That is well practiced, so well done. Thank you very much for that. Warren, do you want to follow on that?
Sure. Hi, everyone. Great to be here. I'm Warren Myers. I'm the CEO and founder of Aura. Aura is a technology platform which enables anyone to access the closest vetted on-demand private security and medical responder to their location, anywhere using a connected device. And our vision is to create a world where everyone is safe by rolling out a digital 911 platform across emerging markets.
Thank you, Warren. Wonderful work you guys are doing. Sam.
Hey, hi there. My name's Sam. I'm the founder of Senlock. I like to more describe myself as a mildly charming nerd. And I solve a problem in email, right? So right now, there's a problem where a cyber criminal can send a mail from you. They can also send one from the President of South Africa. And this problem is called spoofing and impersonation, right? Where cyber criminals can send a mail from just about any organization in the world. We stop that problem and we stop it globally. We help organizations protect their staff, their customers, their suppliers, the whole world get protected from impersonation and spoofing. That's what we do.
Thank you, Sam. Thanks for that. It's great for everyone just to get to know you. I can personally attest to the amount of emails that have been sent from my account to make a payment on behalf of outsourced CFO. It does absolutely happen. So a very valuable problem that you guys are tackling. Antoine, last year for you.
Yes, I'm Antoine, originally from France. I'm the co-founder and CEO of FinChatbot, a technology business created in South Africa. Specialized in creating conversational AI solution for the financial industry. Our ultimate goal is to create the broker agent, digital broker agent, completely automated, or the digital banker, completely automated, available on your favorite app like WhatsApp, web, and Facebook. And we are growing now. We started in South Africa. We have a active presence in 4 countries, Europe and Africa, and growing quite rapidly. 42 in the business. I remember last year, same time, we were 15, so it's growing quite fast. But exciting time, and thank you for the opportunity to speak about capital raise, a proper art to do and to achieve in Africa.
Oh yes, no, you can say that twice. So thank you very much for being here with us. Guys, so yeah, thanks for the quick intros on yourselves and just the companies that you play captain for. It's really exciting to hear all of those stories, and I can hear those pictures up in practice. It's nice to hear. So I guess what a lot of people in the audience would love to hear about is just the actual transactions that you guys did, right? What was the deal like? Like, what was it all about? Like, why was it raised? What are you going to do with that capital? Kind of, what's the growth strategy from here? So maybe Sam, can I give you the floor first? You guys raised the round from Kalon, right?
Yeah, and we're actually in negotiations for some other rounds as well. Yeah. So you're asking me like, why did we do it? How did we do it? All of those sorts of things. I think the main reasons is we spent a lot of time building a product and creating a business, and then when we want to take that product to market, there is a lot of reasons for doing it incredibly fast. And that's what our purpose for the money was. How do we take this business from something which could be totally self-sustainable and work, but how do we do it super fast? So most of our money is all about commercialization, hiring sales teams, marketing strategies, and taking our product to market much faster than we could have done in the past. Does that answer your question?
That's perfect. No, thanks for sharing that. Warren, I'm going to jump over to you. You guys raised a round from Havik, right?
Yeah, so we our history of fundraising is this is my second startup, and we funded the first kind of seed round internally with me and my original company's partners that dried up quite quickly, and then we've taken 2 rounds out of Havik, being great partners, and also looking towards a Series A now. So that's really our history. I'm going to get into a bit more detail of it if you need, but that's the summary version.
Brilliant. What are the expansion plans that you guys have in mind for these raises?
Yeah, so quite similar to what Sam said, we've proven out some good product market fit in SA, and we're solving a problem where millions of people can't rely on public services for critical services. And we are looking now to rinse repeat the model across all countries which have that similar ecosystem constraint, where there's poor public services, really, which generally are paired with big private sector security and medical response companies, and we just aggregate everyone and put it together onto a platform. And like what Sam said, the pace at which you do that is important. Otherwise, your first move advantage becomes not an advantage; it becomes a disadvantage. Sure. So yeah, we're live in Kenya. We've got a team setting up a couple of other markets, even though COVID's not being helpful with that. But we're raising now to go and, as I say, we feel like we've gone from 0 to 1, and now it's really about taking that one as high as possible.
Get it to 100 as fast as you can, sir. Greg, can I ask you? You guys have raised close to in the region of 2 million, I believe, and Kaylon and Havik are both involved in that structure. So very keen to hear as much as you can share about your fundraise journey, what it's been like, and what the expansion plans are that are on the cards.
Awesome. Yeah. So again, I'm going to copy Sam. Very, very similar. The one thing that we are doing specifically is that the previous round, the round that we raised a year ago with Kaylon and Havik, was very much to fill in the both product and commercial deficit that we've gone through. Similar to Warren, we bootstrapped, so basic breaking even, and that means that there's a lot of room to improve and grow. And a big part of the capital raise was for a new market discovery, specifically in the US, and as well as launching into the SMB side of things. So we mainly cater for enterprise customers in South Africa, but from the middle of this year, we'll also be launching into the SMB market, both in South Africa and in the US. So we're currently raising another round to basically catalyze our SMB growth, both in the US and in South Africa.
Sure. Okay, so that's interesting. I think it's very much the South African entrepreneur journey, right? There's a period of bootstrap where kind of early stage seed funding, angel rounds aren't that accessible. So most entrepreneurs bootstrap to some extent for their first couple of years, but there comes a time when it becomes critical, especially if you're a tech kind of company, that you have to make a choice. Is it either, hold on to equity and grow organically? Some companies have done it successfully over a 25-year period, or take the other route and just raise a couple of rounds of capital to grow fast and take new markets, which you guys have all kind of tackled. That's really amazing. Antoine, over to you. We'd love to hear about your raise. What can you share? You guys have done, I think also in the region of $1.6 million relatively recently that's hit the news. Congratulations. And we'd love to hear as much as you can share about that.
Yeah, we've gone through the exercise of raising capital quite a number of times with an angel investor initially. When we bootstrapped the business, we needed some, as we call it, like love money, to start really getting a little bit of traction, because it's really hard to raise with institutional investors without having revenue, having clients, having a team. So it's kind of critical. There's not much seed investors available in the continent. And the last raise we conducted was initially very similar to Greg, like get the right level of product, right level of team, being able to scale up. But we decided quite recently to use a part of this capital to explore new markets. And that's why we're now operating in different regions. We benefited from this kind of new way of working due to the pandemic to start like being positioned elsewhere and scale that up over time, because we realized that in order to raise a future round, in order to potentially close a Series A, we needed to have traction overseas. Being only in South Africa limits the reach of certain big capital raise investors, the South African Rands, the South African Reserve Bank. All those kind of challenges are limiting the access of capital into the region. Therefore, it's a bit more challenging. So we're preparing our next raise by reaching to a couple of markets to show that we're not only a South African business, but we are a South African business with South African operations serving European clients, which is super exciting, because we are solving European problems with an African team, which is generally not the case. It's the other way around. Is Europe is solving African problems? No. Now we're doing the other way around.
Love it. I must say, I'm making a note here on the term love money. That's a really good way to talk about the first fundraise. I think what really broke this open for me is I not too long ago I saw a stat that just had the GDPs of all the countries and all the regions mapped out, and South Africa is less than 0.25% of the global GDP, which is quite interesting. So then the market is big in an African context or an emerging market context. But if you think of the rest of the world, you're less than 0.25%. If that's your whole market, it's going to put a big ceiling on the company. So interesting that all of you guys have already identified that and said, look, we want to build for the rest of the world or for a different major region. But we want to build from South Africa, because having your back office and your infrastructure here has a lot of advantages, especially from a cost and talent perspective. So it's pretty cool to see you guys do that. Sam, I just want to spotlight you for a second, because I've also done some reading on your previous ventures. So this is not your first time around, right? You've already built and sold a company previously in a pretty impressive deal. Are you able to share just a little bit about that, just for context for everyone?
Which parts of that? I mean, growing that business was not only, it was a privilege and an incredible journey to build that business. And to be lucky enough to sell it and exit it, I think I was very fortunate. Truth be told, the people that bought that business, they got a good deal, and I think they're very happy with what was available to them. But a happy purchaser and a happy exit for an entrepreneur, that's a winning scenario, right? So I think that was excellent. I don't know. The interesting thing about that business was that was my first business. And there's a weird sort of thing about building a company out of your garage when you're still living at home with your mom. You just know so much less. Whereas a really phenomenal time to start a business is when you've got 10 or 15 years experience. So I'm just noting now in the second venture that I'm running, now that this is our second rodeo, how much faster and smarter we can do things, right? I used to say that the best time to start a business is when you're living with your mom, but I don't agree with that anymore. It's probably in like your late 30s. The problem is now you are usually a dad or a mom, and now you have to support kids. So the cost of running that whole thing is significantly more complicated. Yeah. But still, what a gift to be able to have a second rodeo, another opportunity at building something great. What a gift.
Brilliant. No, I'm sure it's going to fast forward your process so much. It's really exciting for me to see a lot of entrepreneurs come back now for second times. Guys who've done major exits all across the country and the continent, who are now either coming back as angel investors and or new founders, again starting a new business, new opportunity that they're going to run with and contributing to the ecosystem like that. I think when you've got guys with that level of experience coming back into business, it'll be, like you say now, a different roadmap that they will go through their raises and through towards exit, which is pretty cool to see. Guys,
If
something. Sorry, go.
So if I could just say one more thing. One of the things that's been interesting about starting a second business is I've really realized I am an entrepreneur, right? I like building businesses, right? And it's a phenomenal opportunity.
We're also generally not that employable, right?
Who knows? I've asked the people who've employed me, tell them if I'm employable or not. So, cool.
Guys, I think there's always a lot to learn from the biggest challenge that you faced in the fundraise, in anything in life, I guess, but specifically to your fundraising journey or your last or your biggest round of capital raised to date. I would love for you guys just to talk a little bit about, what was that one thing that was really the big pain point, the really difficult thing you had to get through, or the biggest lesson learned from that process. Sam, can we stick with you?
Yeah, I don't think that it's actually, if you have a great business and you're a good team, your chances of raising capital are actually quite high, right? So I'm actually going to be super boring. The hardest thing about raising capital is mostly all the paperwork. And all the legal, right? Everyone thinks it's pitching and meeting VCs. Yeah, that's hard, but you're talking about your business. I mean, what a gift to be able to stand in front of somebody and pitch your business to them. That's easy stuff. So I really encourage people, get some good lawyers, get it done as fast as possible, because there's deal momentum, which you got to hold on to. If that takes too long, you'll lose the deal. Get good lawyers. Right? It's like, I don't know if everybody else agrees, right?
Greg, what do you say?
I never disagree with Sam. I've come to learn it's not a good thing to do. It's not a wise thing to do. He's the smartest man in any room.
Don't say that.
I think, yeah. I think just above what he's saying is that specifically in South Africa, if you have a good business, fundamental, great team, you will find capital. And I think maybe that lies the biggest hurdle, is that how do you find a smart capital? I was extremely lucky to be in touch with Clive and Ian from Kalon and Havaic, which both has really helped us along. But as much as the investor will do due diligence on you, you also need to do due diligence on them, right? A lot of them make a lot of promises, but at the end of the day, it's the ones that do, because you're getting a partner. It's like getting married, right? I'm not saying anyone who wants to get married. Yeah, absolutely. Yeah, absolutely. So,
it is a marriage.
That's my 2 cents.
Yeah.
Thanks. No, thanks for that. Warren, biggest lesson or biggest hurdle you had to cross to get through it?
I'd say the beginning, especially if you're building a technology product, you tend to fall in love with the product, and you're so in love with the product, it's like your baby. And investors don't care about that. They care about what problem you're solving. And I think that was quite a big mind shift to learn, is you don't go into an investor pitch and start showing how your platform works. They don't care. Well, they do care, but they care more about the problem you're solving in the eyes of the customer. And that mindset shift was quite important. And the minute we kind of learned that, like the guys are saying, if you've got a good product that's solving a great problem, and you know how to distribute it well, like you'll get funding, So that was something that I had to learn early on, and it was a huge help.
Great, thanks for that. Anton, you have the floor last. What can you add to that? What was your biggest hurdle to get over, or the most difficult thing, or the best lesson from the process?
Yeah, so I agree with all of you guys, and don't want to repeat that, but I think one of the key learning for us this year, we managed to raise a round without meeting our investors.
Oh,
so
wow.
We didn't meet them face to face. We only had digital engagement because of the situation. They couldn't come to South Africa because they're based in Europe. And one of the key things that made them, because this fundraise process is all about building the trust. You're telling a lot of stories, you're telling a lot of elements, and they need to believe in you. They need to believe in the man, in the company, in the team. And one of the key things was the data room. So the quality of the data room that shows all the aspects of your business, that you track everything. Nothing is perfect at this stage of your business. You have a mess. It's part of the story. It's part of the growth. But the quality of the data room has helped us to gain the trust to complete the round in the middle of the pandemic. So if I can give one piece of advice, it's not something you build in a day. It's something you build on a consistent basis because you get better at it. And it's the snapshot that you take every month and you revert back to it. And when you raise capital and you meet an investor and they're like, okay, we're interested, you share already, we have a data room, can I share it with you? This is already, okay, those guys are already ready to engage on that level. They know what they're talking about, which is, yeah, that would be my big piece of advice for any entrepreneur looking at raising capital.
No, that's brilliant. I think I can hear the experience from your process coming through there. Also, when we work with entrepreneurs going through a fundraising preparation process, one thing we also spend a lot of time on is making sure that due diligence drive is really solid prior to meeting the investor, because that first impression, if you can, after a positive meeting, send them a drive access and it's rock solid and everything is there, the impression you make is massive. And I think it was Knife Capital research a couple of years ago that said it's a 14% shift in the final price in terms of how strong is your due diligence and your data room. So that, if we're talking a multi-million-dollar kind of company all around, then 14% is quite a lot of bucks into your pocket or out of your pocket in terms of that raise. So yeah, great. Thanks for that share. That's hugely valuable, guys. Thanks for that.
Maybe one more thing. Sorry to interject, but another thing in the capital raise that we learn is it's a number game. So you can't hold only 3 investors in your process and hope that one is going to convert. You have to engage with hundreds. You have to get dozens of meetings to get potentially one. The African game is, it's an investor's market. It's not a startups market. So you need to build that momentum, as Sam was saying, to get the traction and hoping to get a bit of competition, even though it's going to be rare to have competition on deals and more like combination of investors putting the money together. But yeah, so numbers game.
That's probably also why you guys have multiple investors in your latest round, right?
Yeah. Actually, one new, and our so Clive and the team from Compass followed on. So we had one new investor out of 3, including 2 that.
Sure, guys. So yeah, I mean, I think this is really cool. I have so many questions I want to ask you guys. Maybe a quick one we can get through is just from an expectation for entrepreneurs on the call who still want to go into a fundraise. The timeline between when you meet your investor for the first time to when you actually have money in the bank, post deal, post contracts, post everything. Can I just get an indication in months or years if necessary? What were your latest experiences, Greg?
I would say I don't have a lot of experience. I would say give yourself at least 6 months minimum. I do think that it is what Anton says. The better quality your data room is, that will save a lot of time. So I think the more mature you are, the further around you raise, the complexity increases. But I do think the time to raise probably lessens, and maybe it's because you're always raising. We always in a meeting with investors. You don't really stop, right? So, but if you're starting the first time, 6 to 9 months, I would say.
Thank you, Warren. What's your experience of timelines?
Yeah, I think 6 is a good average. I don't want to repeat, but quality of data room and the kind of the pace or the rinse repeat you kind of have with the same lawyer, that's helped us a lot. Try and find a good relationship with the legal team that understands the business, and subscription agreements just are kind of like a lot easier to replicate than moving across to different lawyers all the time. But yeah, I'd say about 6 months. It also depends on the investor. Some guys have got 3 or 4 internal investor committees. There's a lot of, it's kind of the difficult question to answer based on quite a few. It also depends on which round you're at. If you're an angel, you can go and have a dinner with someone and they like it, and you've got money in your bank account in a week. But I'd say like the stage where we're at, it's you got to start thinking like months in advance.
Yeah. Anyone else with different experience? 6 to 9 months seems to be kind of like an expectation. Sam, Anton, what have you guys experienced?
I think there's 2 parts that you always need to think about. So like, there's a whole bunch of work that you got to do to meet investors, pitch your business, all of that sort of stuff. And that's that's like a sales job. You got to do a minimum of 3 months, 3 to 6 months of pitching your business, right? Now, once some investor said, I like you, and they give you an offer to purchase or a non-binding offer to invest or something like that, then you're looking at about 3 months to actually close the deal. So like what you've actually got a non-binding offer. That's why I think there's two parts to this, right? Yeah. So for me, 3 months of post yes, 3 months of legal. That's usually right.
Yeah, on my side, I would be a little bit more conservative and say more 9 months than 6 or 3. From my experience, it can go quicker, but as soon as you have a new investor, and it's really challenging because it's not like 6 or 9 months where you just need to maintain your business as it is. You are making promises that the business is going to grow. You must show that progress. So you must be ready to handle a capital raise by doing a lot of meetings and meeting a lot of people and doing all of that, plus maintaining the growth of the business. Because when you have this first snapshot of saying, this is where we are, this is where we want to be, with your money, you don't get the money straight away, and you still need to show that growth over time. So it's quite, I would say I agree with you, Sam, in the like first engagement takes about 3 months to get a bit of traction, and then 3 to 6 months. Yeah, that's, so you need to be ready for that.
Okay. Guys, thank you so much. Sorry, Sam, one last thought.
Yeah, raising capital is almost a full-time job, right? So my partner does most of that part of the business, and I'm still out there selling, doing deals. Imagine if I wasn't selling, doing deals, exactly what Anton says, much less likely to get investors. So don't forget that somebody's going to be working on it all the time.
And it's important to think about that in terms of how can the rest of the company run, right? Especially if you're only 1 or 2 founders in the business. Sure.
Yeah.
Okay, guys, we're 1 minute over. I'm going to have to cap us. I see the audience. Someone in the audience said they can listen for hours. I feel like I can, just absorb, experience from you guys for hours. It's been really fun. But thank you for sharing these high impact nuggets with all of the founders and investors on the call today. I'm sure it was very valuable for a lot of people who have not gone through their own process or have only done it once or twice and are thinking about it again. So thanks again for your personal investment in the session and the time. And best of luck with all your companies. We are going to keep watching that growth story. Good luck.
Thanks, everyone.
Thanks, everyone.
Yeah, bye.
Thanks, guys. Okay, everyone, we're going to head into a break. We've got about 9 minutes left of our break. For the next, for the next 10 or so minutes, we'll be offline. I've got 11 minutes past 2 on my side now. 20 past 2, we'll be back. So give it about 10 odd minutes. Grab a coffee or something to bite if you haven't, and we'll see you in a little bit. Thanks for being with us.
Hey, Hans.
Hey.
Hey, buddy.
Hey, man.
I've just been for a swim.
No, you know, I took your advice. I actually went for a... Now you hear me, right?
Now we hear us, now we don't.
I took your
No, Hans.
Okay, guys, let's bring it back. Let's bring it back. We've just hit the end of the break. And have we got an exciting one lined up for you guys next? We can probably call it our billionaires session. I see we've got already have Rob and Hans here with us today. We're going to be talking about the Lion's Cage venture, as well as a whole bunch of other interesting things they've been busy with the last while. I'm sure it will keep us busy for a good amount of time. Luckily, everyone knows Hans has been for a swim already, so that's always good.
Rob.
Rob's been for a swim.
I did. I actually went for a swim.
Brilliant. Yes, it's so good to have both of you here today. I mean, we know with everything you guys have your hands on, it must be an incredibly full schedule. So it's a privilege for the founders and investors on this call to just be able to hear what's going on in your minds at the moment. Thanks for being with us.
Lo, we wouldn't miss it for the world. You've been a fantastic friend, and you've been a great friend and ally, and you're always there if we need help. And you run a fantastic business. Outsourced CFO. If I was smart enough, I'd apply for a job. But
that's very kind, Rob. Thank you so much.
Yeah, hi, Love. It's great to see you again, and I really appreciate that you are consistently doing this. For the community. Gathering people, it's so important that you share ideas and you actually get energy from each other.
I appreciate that, Hans. I think I learned from the best, you two, in terms of how to create events and how to bring people together to talk about business and other important things in life. So that's it's the privilege is really ours. Thank you.
So how big is the audience today?
It's a little bit over 100 founders and investors that are live with us, and obviously the sessions are also recorded and then broadcast to probably thousands more afterwards. But yeah, we've got a little bit over 100 people here for the live session, which I think is pretty good. I think they're from 4 different continents, so that's always interesting. Obviously, a big part South African and African, but yeah, we've also got a couple of people calling in from interesting places in the world. So yeah, wonderful to have you guys here.
Great, super.
Gents, yeah, so I mean, apart from catching up, I mean, you guys have been busy. My goodness, I can't I can't get my eyes off the headlines, and there's something else that's larger than life. Rob, I first want to ask you about African Gold Acquisition Corporation, which has raised something like $360 million recently. Please, can you share with us, with our audience, who will be dumbstruck by this number, like what have you guys been up to, and how did this come about?
Well, it's actually 414 million, because we were aiming to raise 300 million. We were 6 times oversubscribed out of a sea of SPACs, an ocean of SPACs. I don't know how many are now, 400 or 500. We're the only.
Stop with that and just go. What is a SPAC, maybe for the audience? Because I'm not sure everyone would know that without being able to Google.
Okay, so SPAC is a special purpose acquisition company.
Yes.
They were created in America on the New York Stock Exchange about 12, 14 years ago, and have really come into their own in the last 2 years because there's so much money around, basically. And a SPAC is a listing, or it's an IPO in reverse. It's an initial public offering in reverse. So you put a team together, have an investment thesis. Ours was mining, gold. Most are tech, by the way. Ours is mining and gold. You put a thesis together, get a management team that fits the thesis, get a board together that really brings the contacts and the value. You then raise a predetermined amount of money, because that does determine what you're going to do. And then you list. So you've got everything but the company.
Yes.
You've got the listing on the New York Stock Exchange, the money in escrow, the management team, and 24 months to buy a business. And the sponsors, the people putting it together, have to put up a certain amount of money. In our case, it was $12 million, and that's gone, by the way, by the time we end the 24 months. So the risk capital is gone. There is risk to this. And if we don't come back with a business that's at least 80% of the aggregate value, in other words, we have to buy $1 billion business or above. If you don't come back with a business that 75% of the shareholders say it's a good one, they get their money back, and you've lost your sponsor promote in 12 to 24 months. So it is risky.
Yes.
And there are now tons of SPACs running around looking for businesses. If the market corrects, they're going to be hopefully we'll have done something. And the reason we chose gold, I'll be very quick here. Every single SPAC was focused on America and Europe, industrial, tech, consumer, blah, 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 blah. Nobody looked at Africa, and nobody looked at mining. So we're it out of 400 or 500 SPACs.
And that's you're absolutely unique, right?
Yeah. I like that word.
Yeah,
it is risky. It's risky, yeah. And it came about because I just decided, let's do a SPAC.
Brilliant.
No better reason.
Rob Herzog, ladies and gentlemen. That's amazing. Good luck. If anyone on the call has a link to a good gold mining company that would like
anywhere in the world, $1 billion or above, must be producing. Bring it to me quickly.
Rob, we'll have to send your number to a few people, because I'm sure you're just going to get calls about all those gold miners on here. Hans, over to you. That's an interesting one to follow. You and I spoke about creating events, creating an ecosystem. You in the beginning, you've been very involved in speaking in South Africa and back home about the ecosystem building in Cape Town for Swedish entrepreneurs. Lots of them we've seen come over, and you've played a big role in creating a kind of almost a bridge between Europe and Africa, from Sweden to Cape Town. We'd love to kind of just hear like your thinking process around how do you build these ecosystems, and do you see deals flowing from it? Is there investment coming through? Is there people, are people changing their perspectives and their lives around this? What's been your journey with it?
Yeah, so I mean, there's a couple of observations. We took a company public yesterday, Trustpilot. We thought we were going to list it at 1 billion euros, and we came out at 1.7.
Yikes. Wow.
So that's fantastic from one perspective.
Congratulations.
The other way of viewing it is there's just too much capital around, particularly in Europe and US and also in Asia. And then if you look at the African continent, it's still kind of, virgin countries. It's, there's more ideas and entrepreneurs and talent in Africa than it's capital.
For sure.
But in Europe and US, it's the other way around. There's too much capital. And the question is, who's going to do the work, right?
Yeah.
So if I found a company, if I put in money into a company, there's a big risk that my entrepreneur that I've just funded is going to go and recruit people for my other portfolio companies. So is the market overheated? Well, that's debatable. But, what I see in Africa is, a continent with 1.3 billion people, 60% are below 25 years old, 60%. No other continent has that demographic curve. And most of those 25-year-olds have a mobile phone or will have a mobile phone. So that cohort of 25-year-olds, the next 10 years, that generation is going to change Africa totally, by digitalizing everything that you can digitalize in Africa, right? You talk about fintech, health tech, ed tech, agriculture, e-commerce, trade enablement is going to go quickly, right? And there's going to be tons of opportunities to invest into the African ecosystem. And that's what I find so interesting. And that's what Rob and I are spending a lot of time on understanding, educating ourselves. We were in Nairobi the other week, met the IT minister at the government level. So I mean, if there's some place I would like to be, I'm not right now in Stockholm. What I would like to be is actually in Africa. And as soon as the pandemic is over, I'm going to be down there and try to do investments with great entrepreneurs.
So exciting, honestly. I mean, the continent would be honored to have you on this end. I know we've spent a bit of time in Cape Town ourselves. Looking forward to having you back on this side when the world hopefully becomes a bit more normal. It'll probably never normalize, but a bit more normal.
And just to add, if I may,
please.
It's like yin and yang having me in Hans. If I may, McKinsey kind of said Africa's time is now at the year 2000. The year 2010, McKinsey said the lions of Africa. And, private equity has been disappointing and investing has been difficult. There are 55 countries. But when it comes to technology, where there's no physical product, it's all digital, the time is right now. Because the venture community have been seeding companies now in a meaningful way, let's say the last 5, 6, 7, 8 years. There's some great VCs in Africa. There's Knife Capital, Habiac, there's, there and further north, seeding. And I think technology in Africa is going to take off. And in 5, 6, 7, 8 years time, you're going to wish today you had got in to the tech sector in Africa, because Flutterwave, the unicorns are starting to appear. Now's the time.
Rob, I love that. I mean, we also feel this electricity in the ecosystem that's heading northwards at a rapid pace. So that's really exciting to hear from you as well. And Rob just mentioned unicorns now and the tech industry. And that's something you're also pretty familiar with. Rob mentioned we should maybe ask you just how many of the companies you've invested in over the years have actually reached that stage?
So officially, we are at 10, but unofficially we have a couple of more. So I mean, investing in amazing entrepreneurs. The most fantastic ride we've done is actually in a company called Hopin, which is a platform for what we're doing right now. It's an online conference platform, right? So moving live, conferences online. We invested in February last year at the pre-money valuation of $28 million. And they raised now, 12 months later, the third round at a valuation of 5.1 billion.
No.
So in 12 months. And it's a fantastic team, stellar execution, the right product at the right time. COVID comes obviously at the perfect moment, and it just accelerates, right?
Dang.
And I think that's something I just want to follow up on. When we invested in Spotify, 2007, 6 months before iPhone were released.
Sure.
Perfect timing. You know, when people didn't want to buy music on Apple Store and iTunes, they downloaded Spotify and started listening to music for free. Same thing with Klarna, which is a buy now, pay later player, huge in Europe. You know, they started 2005, timing was perfect. E-commerce was taking off, right? The same thing is going to happen in Africa.
Sure.
I think the timing is perfect for Africa, right? Go into tech now, invest into, you know, all kind of enabling technologies that are digital. And another very positive thing about digitalization is a couple of things, right? First of all, you know, there's a lot of questions in Europe when I talk to people about corruption. But a digital product is very hard to, for anyone who wants to take money out of the system, it's hard for them to do because it's a digital product. It's not, there's no warehouses, there's no products that needs to be moved, etc. Right? Yeah. Secondly, we were in Nairobi, right? You know, M-Pesa is now 80% coverage in Kenya, right? So digital money going back and forth between people is also, you know, you know, cash is disappearing, which is also hindering corruption, which is so devastating for any economy, right? So I think a lot of things like that is also going to help, you know, the continent actually to grow in a healthy way.
Brilliant. Yeah, I mean, that would be that's an amazing trend that you're spotting right there. Just the inability of, you know, corruption to take hold of digital. That's fascinating. Sure.
Yeah.
Rob, over to you. So you've been building this Invest Africa network for a good couple of years now. So this is a, you know, kind of a global network of investors and, you know, multi-round entrepreneurs who are looking at investing in the continent. I'd also want to hear kind of like speaking to those individuals, like what is the sentiment like right now? Do the most investors, you know, back what you guys are thinking about with their money at the moment, or are they thinking about it, or are you guys just in a different, you know, in a different mind space to the average person you speak to?
Interestingly, Invest Africa is 10 years old, but it's my smallest business, and it's been the lowest return on effort. So it's been 10 years of thousands of meetings and lunches and you know, traveling and it's not worth. It's profitable. It's not a big business, but it has. I've taken me to 35 of the 55 African countries. I've met prime ministers, presidents. I've met 85 of the top 100 wealthiest Africans. And it's been a fantastic platform for sensibly evangelizing investment in Africa. So, you know, you can't just rah, rah, rah. You've got to actually say to people right now, Tanzania and Zambia are not investable because they get the one crazy dude who just died and the other crazy dude still doing crazy things. So they're off the list. But, you know, Rwanda and, you know, Ethiopia and Cote d'Ivoire and Ghana are very investable. So you've 55 countries, you've got to be open and honest. But West Africa is the smallest of my businesses, but the spin-offs have been very powerful. So one is I have an advisory business called African Capital Investments. It's just 5 people in London, me in South Africa. And we do, you know, 4 transactions a year, $20 to $250 million of equity, $1.5 billion of transactions to date, pick and choose, great business, and other things that have spun off, you know, and I think most people in Africa think I'm doing good for Africa. So I'm protected by this little bubble of doing good, which is a good thing, you know. I'm sure a lot of people want to throw me into the sea, but I'm safe for the moment. And when you look at Africa, there are 55 countries, and I think there are probably 16 countries that are investable, of which 9 I would invest in today. And I say this all the time, but then the countries do change. And on the technology front, take Ghana. Ghana is, I think, the 6th fastest growing country in the world. It's going at 10%, 7% GDP growth at the moment. But if you strip out the tech sector, and we haven't been able to do that, I think you'll see techs at 200%, off a much, you know, off a relatively small base, and extrapolate that Nigeria, Kenya, Egypt, South Africa. The tech sector is where you need to be. Everyone's hiring. People are looking for money. It's a real growth mode. South Africa's got probably 0 growth rate, but tech is growing.
Yeah.
So
Very interesting observation. Also, like cutting through just the GDP figure into what's actually really important for what you're investing in.
Actually, if anyone on this call could do that analysis for us, please, we'll pay for it.
Right. Let's get Rob an answer. Let's get. I'm stuck on the numbers you mentioned in the previous part of our conversation, like spotting all those billion-dollar companies in the early stages. Like that's a phenomenal skill. Like there are very few people in the world who have that in the way that you're blessed with it. I just want to understand, for the audience's sake, like how do you identify these companies that go from, you know, a couple of tens of millions into the billions of valuation in 12 months? That's insane. Like, how do you spot it? Like, how do you know?
Well, there's I'm going to tell you two things around this, right? Yeah. First of all, you have to spot the mega trend. So what we had decided we're going to follow the millennials. So the first generation that were digital. So when they were they are born like 85. They were 10 years old when window comes and the internet started to take speed, right? So when they were 20 or 19, something like that, they couldn't afford to pay for music. So we invested in a music service and so on, right?
Sure.
10 years later, they were 27 and they had money.
Yeah.
What did they do? They shopped. We invested in e-commerce. Now they are 37. What do? They sit, they are middle management, or they even maybe some of them are very successful managers, CEOs, and they have a corporate budget to spend. Where do we invest? In enterprise, B2B, hop in, companies. Some companies that, that makes business better, right? So the next 10 years, we think, from a European standpoint, that the biggest change is going to be in the enterprise. Because this digital generation is now plowing through all the infrastructures in companies. So SAP and all these old systems, they're going to have a very tough time going forward. We have a company in Berlin called Personio. Again, just give you a flavor of what you can raise. His turnover is 30 million euros. He raised 125 on a valuation of 1.7.
Whoa.
So, so there's so much money. So if you follow those mega trends, if you so let's look, what are the mega trends in Africa, right? I would say everything. Just follow that 25-year-old cohort. They're going to do the same thing with Africa as the digital generation have done with Europe and US.
And the leapfrog effect, Hans,
yes,
is going to be big here.
So then just to give you, so we get about 4,000 business proposals coming into us every year, 4,000, right? And we can take 2,000 of them off the table right away and say that doesn't fit, wrong sector, wrong business, wrong geography. So we have 2,000 left. We look at those 2,000 a little bit closer, take away another 1,000. So we have 1,000 left. Then we meet, of them, we meet about 700. So we meet about 2-3 companies per day, right? We have 3 offices, one in London, one in New York, and one in Stockholm.
Okay.
And then out of those 700, we invest in 15. So from 4,000 to 15 companies.
Wow.
What is important to remember, we miss a lot of winners.
Sure.
Well, if we say no to a company, the company doesn't need to be a bad company or a bad idea. It just doesn't fit us, timing wise, strategy wise, whatever, right? So that's how we run our business, and we've been doing that for 25 years old. So 25 years. So we've been seeing a lot of what to do and what not to do.
What's the one that got away, Hans?
Quite a few. We're not in Delivery Hero, for example, listed on the stock exchange in Frankfurt, 30 billion in market cap. We're not in Deliveroo. I can go on, right? The worst mistake I ever done myself personally was that I met the Klarna team. Klarna is valued at 31 billion US today.
Yeah.
I sat in a room with these guys 2005. And they asked me personally for $50,000, 10% of the company. Wow. And I said, I don't, you know, sending out paper invoices and, you know, I think, you know, we got to go mobile. So I invested in mobile companies that said, no, thank you to those guys. Yes. So I could have sitting here and had, you know, a big chunk of those 31 billion.
Sure.
But today we are shareholders in Klarna today. So we're fine. But that's probably my biggest personal.
Okay. I'm sure you don't lose too much sleep over some of the ones that you miss, given how well the ones you do catch do, right? Rob, while we have a little bit of time, I thought if the discussion goes in a way that I can actually still ask you this, you know, I'm sure most of our audience would have heard about the Cape Winelands airport that has recently been acquired. Maybe we'll only spend a minute on it because it's like a little bit of a topic, but I felt we have to ask.
Yeah, no. Listen, it's one of those things that has given an electric. I mean, I have hundreds of messages coming in today. Can we do your roofing? Can we do your security? Can we do your, you know? I'm saying, hold on, can we build the thing first? But
Robert's just bought an airport in Cape Town.
As one does. It's sort of North Durbanville. So from where you are in the CBD in Cape Town, it's 35 minutes on the end run. It is 35 minutes. The Klipjewel turn off and you're there. And it was built by the British in 1943, 4 runways. Cape Town International, 1 runway. Lanseria, 1 runway. Got 4 runways. And it was built so well that, you know, one of the runways was, you know, half a, kind of a third of a meter under stuff. We cleared it off, perfect condition. So we actually bought it a year ago, but kept very quiet. And then once we'd signed all the rights, you know, we didn't even announce it. Actually, I mentioned it on the Alec Hogg show, and it's gone viral. People either think I'm crazy or they're fascinated. But I think big cities, growing cities need a second airport, and this is absolutely perfectly located. So I've got to give credit to Nick Ferguson, who Hans knows very well. He's my business partner. You know, he created the Biscuit Mill, the River Club. He's the genius. I just happened to mention it on air and got most of the credit, and I feel quite guilty. Nick Ferguson, he's the smart one. But we're going to build it out, and I think I have a feeling it'll be a big success.
Yeah, that's amazing. Well, I mean, as a Cape Townian, we're very grateful and very excited about the future of this.
Sorry about the name change.
Yeah, that's perfect. Name changes are the topic of the day. Yeah.
But if anyone's interested, email Nick Ferguson. Okay.
Got it. Thanks. So thanks, Rob. Hans, we both have a lot of entrepreneurs who are looking to raise and a lot of investors who are actively investing in companies on the call today. So I thought I'll ask you for maybe your best piece of advice to an entrepreneur looking to raise and your best piece of advice to an investor looking to find the next unicorn, as Hans does.
Yeah, I mean, I think one thing which is very important, you know, if you take Norson, you know, 4,000 proposals coming in. When you walk into to venture, you know, or invest the first time, you really need to know exactly what you want to do. If you come and say, well, I have this idea and we can do this way, we can do that way, what do you think?
Yeah,
that's never going to work, right? Because we are not business consultants. We are not, you know, if we start to tell you what to do, we're creating our own problem because we take the responsibility for what we've said, right? So my biggest advice to investors or to entrepreneurs when they come in, have a very good pitch deck. You know, and a good pitch deck very quickly, you know, needs to address what is the big problem, the opportunity. How are we solving it? This is our product. This is an underserved market. This is our business model. These are the consumers today that we have. This is our competitors. This is our financial model, and this is how we will grow. And this is the team that's going to make it happen. And this is how much money we raise. 10 points. That if you can cover those 10 points in maybe 20 slides, right? You will set. And then when it comes to the investor side, I think, you know, if you're a business angel, you need to choose strategy first. Either you invest in 2 or 3 companies and you really work hard with those companies to make them a success.
Yeah.
Or you invest in 20 companies and you hope that some of them are successful without you. The worst thing you can do as an investor is to invest in 5, 6, 7, 8 companies and then try to spread your so thin so you can't help anyone really doing anything good. But it's 8 companies are too few to maybe sort out 1 or 2 winners that you need. Yeah. And then everything is about people. Everything is about people, you know. Business ideas are all over the place. Everything is about people. So if you find a team that you like and you believe in as an investor, and you think they have the talent to make it happen, go for it.
Sure.
But if you have an interesting presentation, but you feel that the team is not really chemistry-wise fit with you, stay away.
Sure, guys. Luckily, the session is being recorded and will be shared with all of the participants, because I think, you know, in that pitch deck and in the investor advice, there's a lot of notes. I could not make notes that fast. I'm sure those notes will be made afterwards as well. Thank you for that. That's golden. Rob, just a last thing we want to ask about is just Lion's Cage. You guys have launched relatively recently. Just in terms of, you know, a platform for entrepreneurs to pitch online to a global investment community. Like, what are you trying to achieve with it? How's it going so far? And what can we expect from Lion's Cage?
So if I'm going to be totally honest, I've no idea.
Okay.
No, Hans and I started it.
Strategy, Rob.
No, Hans and I started it during lockdown, and it's a sort of adventure experimental business. And to their credit, Gerrit Steenkamp, Dan Sheard, Charles Jacobs get on with doing it. And Hans and I appear every Tuesday. But what it's meant to do is be a member-based community where opportunities are profiled that are interesting enough for those members as investors to potentially invest or help the company with whatever their ask is, to meet a strategic partner, to hire a CTO. We're here to help people with asks. We take no fee, and the only payment is a membership fee to cover the costs. But it's a lot of fun, and we want our members, we want more members, we like our members who are primarily investors to profile businesses they're working on, to stand up behind their companies and say, guys, come and join me on this. And we're expanding from South African companies to African companies to some international companies. Who knows, in the future, maybe we'll have 100 companies profiled a day, and Hans and I will be avatars lying by the pool, just drinking and watching our own show. That could be fun. But we love people involved, and it's an experimental company, and Dan and Gerrit are doing a super job.
Great. No, great to hear that. Thank you very much for that really cool platform. I think for a lot of entrepreneurs, it's a once in a lifetime kind of opportunity to pitch there. And I think you guys are going to do really well as it gains momentum. Well done.
Thank you.
Yeah. Gentlemen, that's unfortunately all we have time for today, and we're just at the cap of our time slot. So just for the sake of the rest of the agenda, I'm going to say, Hans, Rob, thank you so much for your time. Amazing.
Thank you.
Keep doing what you're doing. We're big fans.
Yeah.
Thank you. Well done, though.
Well done. Thank you.
Thank you, guys. I'll speak to you both soon.
Bye-bye.
Bye-bye. Okay, guys, sure. That's a lot. I'm sure everyone else also needs to take a breath in and a breath out. But the excitement is not done. We have got an exit journey story next. So Justin Drennan from Parcel Ninja is going to be telling a little bit about the story of how he has just sold his company to listed group Imperial, which is really exciting. Justin, are you able to join me on the screen?
Yeah. How's that, Lou?
Right. Spotlight.
Is that cool?
Let me see. There we go. Justin, how are you?
There we go. Is that all on, hey?
Perfect. It's on. You're screen sharing. You are live on camera. Great to have
you. Just taking notes. I need to buy an airport.
Oh, good. So you're probably then going to share the size of the tranche with us here today, then, so we can know how big your airport must be.
Yeah, exactly. That's part of the. There's no point in having a small airport, as Rob said. At least four runways.
4 runways.
An airport for ants, otherwise. If you catch the Zoolander joke there.
There we go.
So that's fine. So I'm going to take you through basically the transaction we did with Imperial, give you a bit of a history of Parcel Ninja, and try to fit it all in 9 minutes. Is that right?
Brilliant. Go for it, sir.
Okay, cool. Let's go. So what do we do? So Parcel Ninja, as it stands, is an outsourced warehouse and distribution business. We started as a business where people can leave their products in our warehouse, and it's our job to deliver those products to people's houses or to shops. So we sort of take the promise that an e-commerce or an individual or a company has made to deliver a product and make sure that happens. So as you can see, this is a picture of our old warehouse. We manage everything around the warehousing, the distribution, and the deliveries. And all you have to do is make sure that you get the sales. What we did starting in March is we redefined what the business was going to do. And we had three sort of pillars or key components to the business. The one is our standard e-commerce fulfillment. You leave the products in our warehouse, we deliver. The second one was to set up a business with Unilever to manage distribution to spaza shops, which is quite unique. So there's this pent-up demand within the informal market. And up until now, supply chain and deliveries haven't been able to service this market efficiently. But together with our tech, we went and built a platform that enables big brands to deliver products into the spaza network or spaza shops, which is quite cool. And then with COVID happening, we decided that we wanted to take our courier optimization and reporting engine, which we use internally in our warehouse, and turn that into a business by itself, which is quite cool. So in our warehouse business, when you request a delivery, in real time, we go manage that, or in real time, we go bid for that delivery with multiple couriers. And depending on the service type that people are looking for and the price, we give that to the correct or appropriate courier. So those are the three parts of the business, important. So as I said, we store, we pick, we pack, we deliver. We manage everything around that sort of process there. We also have cool reporting and return processes. So basically, if you're looking to launch an e-commerce site, we can take you from not having a site to up and running in a matter of hours. We did this during COVID with people selling thermometers and masks. And basically, they left their products in our warehouse and we took them to market in a matter of hours. End product looks something like this. This is an old Superbulous box. So you can see it's strapped 3 times, got a special box, got a weigh bill, it's got everything done, stickers. We make sure that boxes arrive like that when people order products. Next, spaza distribution. Quite a tricky story. Basically, we have to store individual products and make sure that we can take an order from a sales rep who goes to visit a spaza shop. That order then gets routed into SAP and into our system. We then pick and pack that order, put into special boxes. We generate invoices for it. We route plan that. We get it ready for distribution. At night, we line haul to multiple distribution points. And basically, if a spaza shop orders some Sunlight dishwashing liquid or soap today at 3 o'clock, we'll make sure that they have it by tomorrow morning already. So the distribution to spas is actually quicker than home distribution a lot of the times. You can see we've got special eco boxes that we make use of for return management. And basically, we manage everything around this distribution to spas, which is quite unique and difficult. The last part, like I said, is our optimization engine. Basically, through a single integration point with us, enterprise customers, or really SMEs as well, are able to manage multiple delivery types. So if you integrate with our Parcel optimized business, we integrate with locker providers, on-demand providers like Uber. We integrate with traditional couriers like Journe or Fast and Furious or the Courier Guy. We have pickup points for collection, and we do Rika deliveries, all through one-point integration. We also manage billing around that and SLA and supply chain reporting through all of this. So I'm just getting this very quickly out. Basically, it looks like this. You say, I want to ship something, which is a 1 kilogram shipment, you can see, which is 10 by 10 by 10 at the top. And we'll give you all of your delivery options with pricing upfront. So you know exactly when you're going to be getting it. You can choose which courier service you want from the suite, and our system will give you the right label to sit in the product, and off it goes, which is quite cool. We then give you nice reporting on top of that, so you can see where things are going, if there's any failed deliveries, if there's tracking issues or anything around that. And basically, this automates supply chain for SMEs. Traditionally, this would only be available through like a SAP or Oracle or one of those. We've sort of sorted that out to make it really accessible and simple to use for individuals. There's also dashboarding, so you can see where your product's going. We show how much we save on a monthly basis on a weekly basis by comparing couriers. And basically, this has revolutionized quite a few SMEs from their home delivery perspective. And all of this happens through a single integration, by the way, through multiple couriers. 2009, where we started. This is our warehouse originally for our Wanted All business, where we import products from the US into South Africa. And if you have a look at the back there, I think you can see an old CRT screen and not even a dot matrix printer in the background. And we used to take all the products from overseas, ship them to South Africa, sort them in our house. I don't have a picture of that. But eventually we ended up getting a little office in Bryanston, which is about 100 square meters, where every single day we used to receive products from overseas. We used to sort them manually, print out labels, and send everything to the customers. We had to know where every single product sits, so you have to do it from memory, which is quite cool. So you have a list of all the items you're looking for on the ground, and you're calling out, I'm looking for the sword from J.J. Jones's a book from that. You're looking for a particular camera and you have to remember where all these things are. So through the sorting process, you ended up with like semi-photographic memories on where products sit, which is quite cool. 2006, we started. 2009, we ended up leaving. This is our entire team, all of us. If you look on the left-hand side there, there's Rosie and Sally with my brother. They were originally our domestic workers who we then brought into the business to help us scale, which is quite cool. We moved to our next warehouse, which is about this big. There we go. It looks like that. Where we put some fancy shelves in. We've got some boxes. We've got trestle tables there with doors on top of that for our doors, for our desks, and basically went ultra lean, cheap to get things going. As the business expanded, we took on board a business called Superblist, which was City Mob back in the day. We took that business which had issues around distribution, and we basically helped them ship products around South Africa. This is what it looked like when they used to ship products to us. It became a little bit messy, and we had to sort of sort things out. 2014, decided it's time to get bigger. Instead of having a 500 square meter warehouse, we went to a 4,000 square meter warehouse. This is what it looked like before we moved in. These are all of our new shelves arriving, together with light duty racking in the background there in orange. 2016, it looked like this. So started getting a bit busy. This was built on the fact that we're doing a lot of work for Superblist. There were a lot of fashion retail businesses we were doing work for. And basically the business was able to expand and manage e-commerce deliveries for sort of about 100 different customers. E-commerce was starting to get going in 2016, but it isn't really where we see it today, obviously. 2019, we had some shoes in the warehouse, which is quite cool. And then 2020, last year, we decided to move warehouse to our new one, which is a total of 8,000 squares with about 6,000 warehouse space. So we went from 100 to 400 to 2,000 to 4,000. And then we're looking at about the 8,000 squares now, which is quite cool. This is what the warehouse looks like for all the guys delivering, which is quite cool. We moved our warehouse and I did 30 kilometers in one day walking around, helping move the warehouse, which is quite interesting, 41,000 steps. So if any of you think that you can't do a half marathon, just move a warehouse. Apparently it's quite easy. This is half of what our new warehouse looks like this year. So there's another picture on the other side of this. And basically, yeah, we've been able to expand quite a bit and things have sorted itself out. 2018, we got approached by a team called Resolve, which is part of the Imperial Group, where they heard about the work we're doing from a software perspective, as well as this like home delivery thing. And they identified that e-commerce is a story. So they gave us a call and said, listen, are we interested in selling the business? We went through a bit of a process with them and decided that it wasn't quite the right time to sell, but you know what, we should stay in contact. So I heard Lo speaking earlier about like, how long does it take to do a transaction? Well, I think the first part is you don't always do the transaction the first time. I think that's interesting around that. But the point is that they learned what our business is about. They carried on watching what we're doing. And then they launched, Imperial guys together with Newtown Partners launched a 300 million rand VC fund with Imperial, which means that the Imperial guys were serious on making investments in sort of SMEs. We ended up doing the transaction not through this VC fund, funnily enough. But we thought that when we had the second conversation with the guys at Imperial, they started to understand what it was like to actually acquire smaller businesses. They managed the entire process really well. We had quite nice interactions with them. We saw the synergies between our businesses. There was commitment from both parties regarding what the business would look like after the transaction. And I think what was critical to the whole success of the transaction really was this guy here. So Benchmark International, we made use of to help us facilitate our transaction. Basically, Dustin and the Benchmark team they provide what's called seller-side advisory services. Seller-side advisory means that they help sellers of business sell their business in the best way. And together with Dustin, when you hire a seller-side advisory service, the first thing means that you are actually serious, which I think is a good indication. The second thing is they know how to manage both parties really well because they're professionals at it. And the third thing is we've never sold a business before in this way. So what do we know about selling businesses? So we need someone to help us. So I think as entrepreneurs, you always try to do everything yourself. Meanwhile, there's such an opportunity to employ or get the dream team to come and help you sell your business. And without the Benchmark team, we wouldn't have achieved what we managed with Imperial, which is cool. At the same time, we had to deal with the multiple challenges. The price earnings, how to maximize returns from both sides, incentivize the people that are staying on the business. We had to do the transaction while the business is still running. So while you're doing a transaction, like it's difficult to focus on the business that you're busy doing. There was legal and compliance drama we had to fix. There were understand the opportunities we have to on integration, and we had to unbundle one of our existing businesses from our holdco, which is interesting. All of this actually was run by the Benchmark team. They did almost all the heavy lifting for us. And because of that, we were sort of able to do the transaction. And like I said, this is some of the things that they had to manage. I think they had to manage like a lot of, I wouldn't say quite a lot of egos, but there's a lot of returns focus. I think that they relieved a lot of the operational pressures and allowed the transaction to actually happen, which I think is quite cool. And so at the end of the day, we went through a process with Imperial. Some of our shareholders exited. Some of the rest of us decided to stay on a model where we'd have high valuations on the business and earn out over a 2 or 3 year period. And the calculations on how we value our business is basically a function or a combination of the revenue and EBIT of the business. And that's basically, in a nutshell, the story of our Parcel Ninja business in 10 minutes, together with how we managed to sell it. And I spoke really quickly to try and get through as much of that as possible.
Wow, Justin, that is amazing. Thank you very much for taking us through so much of it in such a short little bit of time. I got way more than we bargained for. That's very, very special. Yeah, you guys must be so stoked. Congratulations from all of us. It's great to see, ecosystem, born and bred entrepreneurs growing a company from scratch in that first home office, all the way through the motions, through the years, up until an exit like this to a big listed player. Congratulations on all of that, and good luck with everything that's in the next phase for you.
Sweet.
Cool, man.
If anyone needs to get a hold of me, just email me, justin@parcelninja.com. Always happy to answer emails, help. Always cool.
Thanks, champion. Next time we'll give you 20 minutes for it, right?
Exactly. No, that's the shortened version, but that's all good.
No, appreciate it. Thanks. So much to learn from that. Really appreciate it.
Thank you, everyone. Cheers.
Great. Bye-bye. Okay, guys, we're on our second last session. That was a powerhouse presentation by Justin. Super cool to just see how they've built from scratch over the years and managed an exit, and great to see how, Benchmark International is also a partner of Outsource CFO that we work with regularly. Great to see the guys doing such good work on an exit like this. We're really proud to see that. So I'll now pull up the Outsource CFO team. We've asked a couple of our professionals and partners from the OCFO side to talk about just kind of like what the process of preparing for a fundraise looks like, and what does it mean to actually be, funding ready or investment ready as an entrepreneurial company. So I'll get Jock and Uwais and Leanne and Calvin all on the line here as the guys jump up. So these are just the professionals that work on different levels with different types of deals with entrepreneurs going through their raises. Outsource CFO teams, clients over the last 7 years have closed more than R1 billion worth of transactions with different types of investors. So these guys have really they've seen a lot over the years. So guys, over to you for the panel discussion. I'll give over to Jock to lead us off. Good luck, guys.
Thank you, Lo. Thanks for that. Thanks for that, and welcome everyone. Uwais, you're going to take us and facilitate us through this session. So as head of advisory, excited for this session.
Perfect. Thanks, Jock. I don't think we're going to be able to speak as fast as Justin, but we'll try and get through as much as we can. So hello everyone, welcome to Are You Finance Ready? I'm the head of advisory services and Outsource CFO, and we've got an experienced panel with us today who've dealt with capital raises over the last 7 years. We've got Jacques Lagrange, a chartered accountant and director at Outsource CFO, and he focuses on streamlining functions and operations at clients. He's also been involved in fundraising for startups. We've also got Leanne Kujinga and Lobo, our cloud practice manager, coming all the way from London. She manages client relationships, secretarial, operations management, and team management, and also, last but definitely not least, Calvin Craig, who's also a chartered accountant and one of the financial consultants at OCFO. He provides clients with CFO advisory services, and has also been involved in many fundraising deals for our clients. So to get into the topic, some of the questions that I'm going to put to the panel that we want probably to have answered at the end are the following: is number one, do you have a scalable business or a lifestyle business? Do you have a robust financial 5-year financial forecast model to present? Do you have a financial valuation model? Do you have a pitch deck, a due diligence pack, or a data room that I mentioned before? And does your balance sheet and income statement allow for the investment that you're looking for? So we want to answer all of these questions in our discussion this afternoon. Luckily, we've got an expert panel to discuss this with. So Calvin, over to you. what do you think, what does a robust financial forecast model look like? Calvin, did we lose you? Right. Okay, I'll get back to Calvin, and we can maybe come back later. Let's yeah, and let's talk a little bit about that due diligence pack. They mentioned it as a data room.
Yeah.
What is it? Or you give us a little bit of a detail about it.
Thanks, always. I think for those who were with us earlier, Sam mentioned that the hardest part about raising finance for him was doing all the paperwork. And I got really excited because this part talks about the paperwork. So a due diligence pack, DD pack, is a collection of all the important documents for a company. In essence, this allows the investors to understand your company or an entrepreneur's company without the actual entrepreneur having to explain it to them. So a data room or a due diligence pack is just a place for all the important information, such as the documents, the files, where you upload and share and store them. So that's what it is.
Okay. And give us a bit of a more detailed example of what's included in the pack.
Okay, so what some of the compulsory or items that you would have in the pack would be the legal structure and the articles, the articles of incorporation, the MOI, all the registration documents, previous capital raises that you would have done, board of director meetings or previous actions, business plans, company financials, operational data. You can also have in there your tax information or IP information. So those are kind of the things that you would have in your DD pack.
So I mean, for the audience out there who haven't heard about this before, the first time they're hearing data room, first time they're hearing DD pack, what can go wrong if they don't have a DD pack in place?
Good question, Uwais. So what could go wrong if you don't have a DD pack in place is potentially having the deal to fall through because you do not have supporting documentation. So if you're not keeping a good record of your shareholder information, if you don't have a good record of your financial statements, not having these important documentation impairs your reputation because you can get so far into the process with talking to investors. Without this sufficient information, they wouldn't be able to go through with the deal. So like what Simon said previously, invest in a good lawyer or an accounting firm that assists you to be investment ready, I suppose.
I mean, imagine a deal falling through because you didn't have your subsidy documentation in order. That's what, worst case, 1,000 Rand or 4,000 Rand maximum a year, and a R1 million deal falls through. That's so risky. It looks like we've got Calvin back with us. So Calvin, just to switch back to you, what does a robust financial forecast model look like?
Thanks, Ray. Sorry, must have been my internet connection. So yeah, thinking about a financial forecast model, it's absolutely pivotal in the fundraising process. Well, hopefully our management team has some income statements, balance sheet items, as well as cash flow statements that they're managing on a monthly basis. If not, get your accountant to set you up so that you have those things in place. But basically, a financial forecast model wants to look at an income statement, a balance sheet, and a cash flow statement over a period of 3 to 5 years in the future. So if we think about our income statement, you want your revenue drivers broken down nicely. You want your cost drivers broken down nicely on a variable basis, so that you can understand what really drives your top line items and your gross profits. And you also want to obviously understand what your overheads are of your business now and going forward, especially now that you don't have the fundraise, or when you do fundraise, how that changes as well. Very important on your balance sheet, you want to understand your working capital cycle and the effect of that on cash flow. A CapEx budget, think about what sort of capital expenditure you need to forego, or at least spend to scale. And then think about your taxes, your VAT, your provisional tax and income tax, that all affect cash flow on a monthly and biannually and yearly basis. And then I would definitely recommend to also have scenario plugins for the fundraise. So if you're going to raise R1 million, what that looks like in the future and how that affects your business. If you're going to raise 5 million Rand, what effect that has on your growth expectations.
I've seen so many times where people do income statements and they forget about the fact that they need to replace some of the capital items in 3 or 4 years. So that capex cash flows is very important. And tell me, so on a financial forecast model, what are potential investors looking for?
Well, it depends what investors you're looking to attract. Are you looking to raise funding in terms of debt, or are you looking to raise it via an equity deal? So it really just depends on those two ways. Can I potentially elaborate further on that?
Yes, please go for it.
Great. I think from a debt funding perspective, debt funders are going to look at your balance sheet as a business. They want to understand, is your business solvent? Just from a high level, do assets in total exceed liabilities? They want to understand, is the business liquid? Will your current assets exceed your current liabilities in the short term? They want to look at profitability. They want to understand, is your business going to be able to repay capital interest on a monthly basis? So in that sense, they have to understand that your business has cash flow in future, given that it's obviously gone through a bit of a dip now or it needs additional funding. Will the business be able to take on payments of capital and interest on a monthly basis?
That's so true. Because, sometimes they pay if it's a good year, they've got profits. In a bad year, if there's no profits to cover interest, then you've got a bit of a problem. And that's what debt funders definitely look out for.
Exactly. And then, from an equity perspective, your equity funders, it depends what level they come in. Are they coming in, from a VC level or private equity level? It can become a bit more technical, but ultimately they want to know that your business has products and services that are in high demand in that specific industry. What differentiates you from your competition? What makes you really stand out? And in that sense, they invest in their own money or their own firm's money, so they want to know that there's growth potential. There's obviously more risk, but more upside as well, given it can be managed well. I think a solid management team always stands out. You end up investing in people and not in a product or a service. You rely on those people to really drive the investment forward. So a solid management team always stands out like a sore thumb. And owner-run management teams also definitely gives you, I would say, an extra 5% likelihood of raising that funding.
That's great. Jacques, I'm going to move over to you a little bit. Let's talk a bit about the pitch deck. They mentioned it a little bit before, but briefly, what is a pitch deck?
Yeah, so a pitch deck, Leanne and Calvin spoke a lot about the back end and more of the data that guys would look at. But your pitch deck is basically your one opportunity where you pitch your business, basically with a pitch deck of 10 to 15 slides, just walking possible investors through whatever opportunities at hand, and you want to engage them. So it's also a storytelling a part where you just tell more about the business, but in a way that's engaging and coming with energy at the same time.
Okay. And what do you think what needs to be included in a pitch deck that would sell an investment proposition?
Yeah, no, perfect. So I think earlier it was mentioned very quickly, if there's some of the 10 points, I'll list a few, some of the components of the pitch deck. So the first thing, as was mentioned, is what is the problem that your entity or your venture is solving? And then you also want to state, so what's the problem in the market? You want to give an indication, a slide of what's the market size that is experiencing that problem. And you want to show through that, is it the market size significant enough, and can a business case be built around that? Then next you want to look at what's the product or solution to this problem that you've stated in the market, and how does it benefit the market? So you want to be clear on that. And then obviously, as was mentioned by Calvin as well, who's the team driving this? Who's the jockeys that's involved in this? Because in the end, investors invest in the team almost sometimes more than the actual business, because those are the ones that are driving it. So you want to mention in those slides who's the key team members, what is their experience, and link that to how that experience relates to solving the problems stated, and as well what prior ventures they were involved in. Next, obviously you want to, as part of a market, look at who's the customers and consumers of this product, who is buying this product and why would they be buying it, and how much, what is their worth, and is there momentum in the market at this stage. And that also would speak to your revenue model to an extent, and how you would grow. Next is obviously then just looking at what's your go-to-market strategy, how do you reach your customers, and then especially what is the cost? Because investors would want to know, are you using an old way of getting to the market, which might not be cost effective? And then next is obviously just your bigger business model, just laying that out, how things are structured and coming together. And then competitors analysis, showing where in the market are you compared to your competitors, how are they solving the problems stated, and how far are they in that process. And after that, and also then a slide just on the financials, which Calvin has mentioned, just stating a bit of what the ROI, break even, and those type of things might be, and also stating traction that might be involved. And then in the end, you want to give an idea of where are you in the funding process, like what's the milestones that you have reached, and then at the end, what is your ask and how that is put together. So just briefly, that's like your composition of how your slide deck, pitch deck would look. So giving the investors an idea of what is the problem that you're being solved? Are you capable of solving it? Who's your team, your market, your customers? And just going through that whole part, and then at the end, just stating what is your ask for this round as well.
Thanks for that, Jock. Also, it's also a good point, that it has to be investor friendly, because you've got 10 or 15 minutes to impress this investor. So you have to tailor the presentation to that investor, because if the investor's not interested, you're not going to get investment and you're wasting their time. So that's something that people should also consider. I'm going to open up the floor a little bit and ask a few questions and just see if we can get a few answers. We've talked a little bit about the pitch deck, the DD pack, and the financial model. What else should an entrepreneur look out for, Leanne?
Good question. Great that you picked me first. But I think an entrepreneur should also look out for what is being said on social media about their business. So what is the social image about your actual business? A lot of entrepreneurs do not have money to hire a PR firm or all of that, but just look out what's happening on social media. How is your brand being associated out there, especially when it comes to customer complaints?
Calvin, thought from you?
Yeah, great point, Leanne. I think stepping back from what Jacques said, if you're going to have an investment ask, especially if you want to raise equity funding, you have to understand what your business is worth, or at least a range within what your business could be worth. So I think a valuation model would be critical as part of the funding readiness program.
And Jacques, any thoughts on you?
I think overall to remember that a business is processes and people, and you want to look at how is it a scale, are you building a scalable business, and are those things in line? So how's your processes looking? Do you have a right team? And just focusing on that, continually building that your product, and also thinking of, are you working on your business or in your business? Because if you work in your business, it's probably limited to the amount of time you have available, but working on your business, you're building a product, something that's scalable and then investable. So just making sure how you channel your energy in that as well.
I like what you said there, touching on the difference between a scalable business and a lifestyle business. And a lifestyle business is probably where you as an entrepreneur, you're currently servicing the customers, and investors are not likely to invest in a business like that. A scalable business is one that can grow without an entrepreneur being involved in servicing the customers. So if you can change your business from a lifestyle business to a scalable business, that might mean employing more people to do that work on the clients that you were previously doing, somewhere that, so that you can focus on working on the business and not working in the business. Thank you very much, team, for that. In summary, if I could just go through some of the thoughts, is do you have a scalable business or a lifestyle business? You need a robust 5-year financial forecast model to present to investors. A valuation model that is supported by that financial model is also important. An investor-friendly pitch deck is required, and without the due diligence pack, your deal can fall through. Thank you, Jacques, Calvin, and Leanne. We appreciate the time.
Thanks, Uwais.
That's us.
Thanks, Uwais. Thank you, panel. Some brilliant insights. Lots of the things that Hans mentioned earlier as well being just reiterated here by the professionals. It's great to hear. Thanks for the practical insights. Well done. Great. Okay, guys, we are on to our last session. Can I ask Donna to join me on the floor, please? Guys, so Donna Pretorius is one of the co-founders at Outsource CFO, and he's also the director in charge of strategy and fundraising. As I think it was also Hans who mentioned earlier, like if an entrepreneur team want to pitch for capital, they must be crystal clear in terms of their strategy as to why are they raising, where are they going, what are they doing, what are they not doing, etc. So we asked Donna this question, being a master of fundraising and of strategy, like how does a founder team or a management team put that strategy for fundraising into action, and how do they present that? So Donna, over to you for this last interesting session of the day.
Thank you so much, Lo. I hope everyone's still strong. And if you don't mind, I'm going to share my screen for this presentation. Perfect. So, ladies and gentlemen, it's my privilege to end off with a little bit more on strategy to get funding ready. I'm going to take you through some strategy considerations for that. Like Lo has mentioned, I am a co-founder and director of Outsource CFO. Some of my strengths are that I'm very strategic, very futuristic, and I really enjoy developing people. So I'm very privileged at Outsource CFO to really help our clients with strategic direction, as well as to help our clients with fundraising. So just very interesting. I did a previous talk at the previous FundRaise conference on the 7 steps to being funding ready. And I thought, let me give it a different spin this time around and rather focus on some strategy considerations to get funding ready. So at Outsource CFO, we like to focus on every business has the hierarchy of financial needs. You'll see there from levels 1 to 7. At level 7 is the strategic direction. Typically, your fundraising strategic considerations falls within that element, but it's super important as a business to have elements 1 to 6 in place when considering to raise funding from a strategic point of view, because that could just prohibit an uncontrolled expansion, which wouldn't help your investor and wouldn't help you as a business. So very important to build your house, your business, your financial function, considering level 1 to 6. And then obviously the strategic fundraising elements to be considered under element number 7. So for a lot of our clients, we help with strategy, we help with fundraising. We recommend a book written by Vern Harnisch called Scaling Up. I believe a lot of you in the audience are familiar with this book. It's an amazing book. Very interesting. Some elements in this book talks about 3 barriers for scaling up. Why is these barriers important? Obviously, when an investor is looking at your business considering investment, they're obviously going to see are you addressing some of these typical barriers. So these 3 barriers are typically like, from a leadership point of view, you struggle to either upskill you and appoint the necessary leadership that can take your business to the next level. From an infrastructure point of view, your infrastructure might be inferior or not able to handle the volume, the mass, the growth, the scalability that's required to take your business to the next level. And then from a marketing point of view, a lot of businesses struggle to penetrate the market, even after they've received funding, to not hit the right avenues. So I would say from a strategic point of view, definitely address these elements in your leadership, your infrastructure, and your marketing campaigns to to be as attractive as possible for investors. To the top half of this page, this is a very exciting strategy exercise we do with our clients. We always start with the core values. If your team is not aligned with core values, don't even try and raise funding for business. Your culture trumps strategy. So your team needs to be aligned in what your values are. It will help you to decipher and decide who's the right fit investor who's aligned with your values that need to walk this journey with you. And then in the center of the page, you obviously got your BHAG and your big, hairy, audacious goal. It's important that as a business, you know where you want to go and that you don't have an uncontrolled expansion, that everyone is on board from a strategic point of view. And that will obviously help you from a strategic priorities to filter it down even to a quarterly basis. So let's say you're a business owner and you're considering to raise funding, or at least from a strategic point of view, start thinking about future fundraisers. I would always start with your business model, not reinventing the wheel, but getting all your the different department managers in-house, look at all the building blocks to your business model, look at it, ask where, if you were to give in $1 million now, where would you expand? Where would the opportunities be? Just brainstorm with everyone, give everyone's input. Also see where the areas are where you're going to struggle, where that scalable infrastructure is not going to help you to grow, and just highlight that. Another great exercise to do from a strategic point of view is to do some competitor analysis. Go and find a competitor that's 3 or 4 years like before you, or have walked that journey before. Reverse engineer what they've done. Look who has invested in them, and try and learn from them from a competitor point of view. Just some of your strategic considerations there. So just to add on to the steps to being fund ready, a lot of this has been mentioned. So and there's a detailed YouTube video on this as well. So I'm just going to quickly touch base on that. Everyone knows, stating the obvious, building a great business, very important, building a great team. Make sure that, from a strategic point of view, that the buyers and the team composition is very strong. Like Hans has mentioned, relationships, people, relationships. So that is so important from a team element. I also like someone else mentioning that you've got a dedicated one of the founders also that drives the fundraise drive, so that that there's not too many chefs in the kitchen. The second element is building a great value proposition, and very important to be able to tell your value proposition, your story to an interested investor. Very simplistically, they have a short attention span, and just that storytelling element, you need to solve a real world problem. And cash is king. Don't raise funding when you're in a cash-struck position, because the bargaining power might not be in your court. So just consider how you are or managing your current cash flow. Then I'm going to focus a little bit more on your clear expansion strategy and some considerations on that. So building a business is almost like climbing Mount Everest. You need to see where your aim is and where you want to go, where you want to grow your business, and you might need to see where you currently are, and you might still be at a base camp or so. So a great way of looking at it is sitting with your team, asking yourself, in mind, from a strategic point of view, what do we want to achieve? What does our Mount Everest peak look like? And after how many years do we want to achieve it? And make sure that you and the team is aligned with that. That will enable you to reverse engineer different milestones. Say, listen, what do we need to achieve? Where do we need to be at to be in 3 to 5 years' time? And then that will really help you to drill it down into quarterly goals, to yearly, annual goals, as well as quarterly goals. So again, a great exercise to do for you as a business owner. Another strategic element to fundraising is some entrepreneurs don't know what the opportunities are in their own business and the fundraising opportunities. That's where we like to go back one step under profit and cash maximization, where we help our clients. We typically look at something called the power of one and the 7 levers. So the power of one and 7 levers is an amazing tool to use. It's almost like if you were to spend 1%, improve 1% in a certain avenue of your business, where will the maximum benefit be for your business? What will the effect be on your cash flow? What will be the effect be on your earnings, your your profitability. And it might be you need to ramp up your volume, penetrating the market. It might be that you need to look at more profitable gross profit margin product lines, or just looking at the way are you recovering cash at your working capital area. Brilliant exercise to do, where you basically populate it with your existing balance sheet information. And then to the right of the screen, you see all the 1% toggle keys that you can see. What will happen if I were to increase the price, the volume, etc. And then to the right, it kicks out the effect on cash flow and earnings before interest and tax. Very important tool, especially for entrepreneurs that want to build a business and have maximum valuation at the end. Understand the variables that will determine the valuation at the end. And then know what variables is in your control and what areas you need to focus on. You know, for instance, someone with the EBITDA multiple know that they need to also can't just penetrate the market. They almost consider cost cutting as well. Or people with the sales multiple valuable know that they need to focus on penetrating the market with getting that sales volume increase, etc. Just a few considerations for that. So having a clear expansion strategy is super important. Know what the opportunity is in your business, anything from a new equipment or new that can increase your production capacity, new IP licenses that you have, might be a marketing campaign or anything like that for you to penetrate the market. So that's from an investment decision. Remember, investor wants to know what will typically be the return on this asset. Are you sweating it? Will you be able to justify investing in it? And the second consideration is obviously the financing decision. How are you going to finance it? Is it better to get debt? Is it better to get equity? If it's debt, should it be short-term of nature, long-term of nature? And would you be able to justify the interest rate? And obviously the strength of your business from a solvency point of view. So that's just a few considerations from your expansion strategy. Moving on, a lot of the last few points have been mentioned, so I won't focus too much time on that. I'll just quickly move through that. A clearly defined financial model. What I'll add to that from what Calvin has mentioned is make sure that your expansion strategy has been incorporated in your financial model, and that what Jog also mentions, the ROI. Investor wants to be able to see this would have been your business that has grown organically. This is how it would look if they would have come in from a point of view. And this is typically the returns that they can expect post-investment. Then understanding the valuation of your business, like I've mentioned a little bit later, is see how you can tweak the variables or focus on the variables as a founder from a strategic point of view to maximize your valuation if that's a route that you're aiming for. Then under the nail, the diligence, I won't elaborate too much on that. Leanne has nicely focused on that. What I can mention is just be on the lookout for the deal breakers. Deal breakers include non-reliable financials, not being compliant, tax compliant, for instance, not having a strong team, or even something like an uncontrolled expansion, which is too aggressive and it could result in the investor backs out, as well as a few other considerations. Then a little bit more focused on deal crafting, some strategy considerations with deal crafting. I've heard a few great considerations with that. What I like here with deal crafting is relationships really matter. So if you have found a mandate fit investor that you are very eager that they invest in you, go and see if you can find some of the other businesses that they've invested in. Ask some of those businesses if they would be so kind to make introductions for you, because they already have a relationship with these investors. And then it's almost like when you have start building up a relationship with the investor. It's not, you shouldn't just send them a pitch deck and hope you're going to get funding in the next week or so. It starts over time. If you're considering to raise funding from a specific investor over 3 years from now, try and make contact with them at a networking event, that they're aware of you, make sure that they're following your newsletters, send them updates of excitement, growth opportunities, what's happening, etc. So you are building a relationship with them up at that stage where you're ready to pitch. Then you'd really already have that chemistry and a relationship with them. There's obviously the art of making the deal crafting is obviously very specific. There's a lot of matter experts that's very equipped in that. I think as a business owner, as a founder, you need to almost like equip yourself as well. You need to be able to navigate that in the boardroom. Some considerations here, which is quite obviously, is not to discuss value too soon, and difficult to backpedal after you discuss value. Ask for those term sheets from the investors. Don't only talk to one investor, trying to get a few investors that you're having discussions with, really see what they're coming to the table, and just have that value of choice. And I think what is important to mention here is, raising funding is not a financial exercise. It's more a marketing exercise. So really have, like Hans has mentioned, have an amazing pitch. The guy's attention span is very short. Make sure that you have a great story to tell, and that the guys are really interested in you. And approach investors with a mandate fit as well, and really see and ask yourself what's important for them. Be flexible, and as an entrepreneur, make sure that you see the journey through till the end, up until money's in the bank, and just some strong say. That's the last consideration here, is just have an amazing pitch deck when pitching to funding. And that's basically from me on some strategy considerations to being funding ready. I'm just going to leave that slide here on the screen while I give over to my friend Lo. Thank you so much.
Thank you, Donna. Thank you very much for taking us home. Some really good structured insights there. Thanks so much for all of that. Mike, would you mind popping me back on, please? There we go. Great. Okay, everyone. So that brings us to the end of our session. That was the last one. Donna, thank you again for all those insights. I love how you've kind of structured it, and I can see it's that the thinking process has been refined by working on many different deals over the years. Really great to have all of that, and to be able to share those insights with the entrepreneurs looking to go through Raise. I hope all of you guys have gotten some exceptional value from today. I must say, from my side, I've got a lot of notes to go back to. I'm very excited about it. We will be sharing the video material from today to the participants, so you guys can keep an eye on your inbox. Christy, thank you very much. I see it's been quite meaty. I think all of us have we've got some homework to do after this in terms of how we build our companies and how we think about fundraising for the future. So we hope to see all of you guys back soon. Keep an eye on your inboxes for the next event that we're going to be hosting. And if you're going to go through a fundraising process and you want to get the experts on your side, obviously reach out to us and have a chat with the team at Outsource CFO that helps entrepreneurs raise finance and grow and scale to reach success. That brings us to the end, guys. All the best. Have a good day, and we'll speak very soon.